Discovered a new coronavirus in bats that can enter cells using the same receptor as COVID-19. Anna, let's get to the open.
Okay, yeah, busy dealing with the results of the German election, so we don't have time to explore that one in any more detail right now. But let's get to the market open and see how markets are digesting the results of the German election. And we have a lot of news flow from Germany, of course, to price in. That doesn't mean necessarily we get an open on the Xetra DAX any earlier than we normally do. So we might be waiting a couple of minutes for that one to happen. But we've got the Stock 600 just opening into green territory. The FTSE 100 up 0.1%. Actually, no, faltering now, just flat. But it really wasn't in London or in Paris or in Madrid that we're expecting to see any of the big moves today. We are expecting to see some considerable upside coming through on the German market, and we watch for that. The CAC 40 actually down by 0.2%. So we do have a bit of, well, not much corporate earnings news, but we certainly have some corporate news flow, Lizzie, in the shape of M&A stories to keep us busy while we wait, perhaps, for the DAX to open.
Yes, well, we are still waiting for Deliveroo and Delivery Hero to open. But as we look at these markets sectorally at the moment, given that we're still waiting for the DAX, you've got about half of sectors in positive territory. Utilities leading the gains, higher 0.4%. Basic resources at the bottom of the basket, down 0.6% as things stand. Just looking for some of these individual movers, though, I did mention the European vaccine stocks, and you've got GSK higher 1.4%, Novo Nordisk higher 1.5%. Could this be to do with that news of a new coronavirus? Keeping an eye on those, but there is a lot of red across the sector as well, including for Roche and for Sanofi and for Bavarian Nordic as well.
Yeah, there's a lot to digest when it comes to Germany, so we're waiting for the DAX to open up, of course. We do see opening prices on some of the individual names over in Germany, so that's of interest. I can see that Commerzbank is going higher, for example, just 1% or so. So none of the moves I see right now to the upside seem substantial. Interesting, Siemens Energy, I see that one as quite a substantial loser this morning, so we'll continue to track that. We've been tracking anything that's connected to data centers and AI, of course, after we saw some really interesting news lines from one of the brokers around Microsoft on that front during Friday's session. So we continue to watch that. But Schneider Electric looks to be Siemens Energy is one of the fallers I can see in Germany. Schneider Electric over in Paris is also under pressure, down by 2.4%.
Yeah, we continue to wait for the DAX to open this morning. We have BASF shares up 2%. We are still waiting, though, for the big car names, the likes of Volkswagen and Mercedes, to give us a read on the market reaction to this German election result.
Yeah, absolutely. Maybe the reaction will just be in the big picture moves rather than the individual names, but we'll certainly watch for both. Let us talk now to Maximilian Euler, who is the head of European Equity and Cross-Asset Strategy at Deutsche Bank Research, and joins us now. Maximilian, we're waiting for the DAX to open. There is an expectation it goes higher. Does it make sense for you that we seem to be approaching the result of the German election from a stocks perspective as risk on? Yes, we might get to a coalition pretty quickly versus previous German expectation, but there is this possibility that any change to the debt brake could be vetoed by a blocking minority. So how risk on are you feeling for German stocks this morning?
Yeah, so really a mixed set of results, I would say. As you mentioned, I think a two-party government, that's extremely likely, and I think that's an improvement incrementally versus what we had. We had a three-party government, so that's better, and I think the market should be happy to see that. We see more reforms more quickly. However, we have this two-thirds majority not for those companies, not for the centrist parties. And the problem is, I think we should be discussing this, is also interesting from a sector perspective, is that we have more than one-third with the far right and the far left. So, the far right, they are opposing support for the Ukraine, so they won't be very supportive on a new defense fund or more defense spending if that's going towards the Ukraine. And then on the other hand, we have the leftists, and they actually want to spend less on defense. So I'm very curious on how the defense stocks are going to perform this morning or over the next couple of weeks. I think there'll be a lot of question marks on how possible is it that Germany is going to have a debt brake change? I think less possible than we thought maybe a week ago. So I'm not completely sure that the market will hold up from what we've seen in the futures.
Well, Max, as we've been speaking, the DAX has opened its highest 0.7% currently, welcoming this result. But I have to ask you, Friedrich Merz has been talking about the urgency to get a coalition done. He's also given us a sense that maybe it'll take 2 months. How long is too long if this bullishness is to last?
Yeah, so 2 months is kind of the average we've usually seen. He's been saying we should have one before Easter. I think the chance of that is pretty high. I think it could actually be a little bit quicker than that, because the SPD and the CDU, they've repeatedly been saying we know there is an urgency to get to a coalition agreement. And apart from the differences that we've seen over the campaigning, actually the rest of the parties, the rest of the people in the parties, they're actually agreeing on a lot of things. So I think we will be on track to meet market expectation. The exact date, I don't know, but I think there's a good chance that we'll have a coalition early April.
Well, Max, I just want to go over to Kriti now, because she's got a breakdown of how these German markets are faring at the open. Kriti.
Yeah, Lizzie, as you said, the DAX is officially open. It is as expected. You were seeing a lot of breadth when it comes to this market. Your biggest index contributor, though, is ultimately in those defense stocks. And this was kind of expected with the narrative we've seen in the last 6 weeks or so. Let's start from the macro and work our way through sector by sector. When it comes to the broader German indexes, of course, you are seeing green on the screen. I'm looking at a DAX that is flying higher by over 1%. This is enormous when it comes to some of these moves. And it is important as well, not just to look at the headline factor, the large cap factor, but the trickle down as well. And that's going to be really important. Let's also talk about this from a kind of mid cap and small cap perspective, because if you were talking about massive fiscal spend, the small cap sector matters. It's higher by about 1.5%. The smaller you go, the bigger the impact. How much of that is related to the election read through? I want to go sector by sector here. So let's go to the autos immediately, because when I'm looking at the percentage change, names like BMW immediately come to mind. I'm seeing a move here about 2%. Mercedes-Benz as well, higher by 1.4%. Volkswagen, of course, especially in light of a lot of those layoffs, higher by about 1.7 as well. Even Porsche higher by about 2%. Let's talk about some of the other German majors, because defense is a very key piece of this as well. And Rheinmetall already flying off the handle here by about 3%. You also see a bid into the tech space. SAP higher by 0.5%. Deutsche Bank higher by 1.2%. Not in on the risk rally, though, is Adidas. And this is going to be crucial. It feels like the consumer sector of Germany, alongside the energy sector, really falling behind and not taking part in the risk rally this morning. About, we'll call it lower by about 0.1% for Adidas. A quick check on the bond market as well, because there's German Bund yields are crucial, as are the euro. We know the euro has already been flying, but the German Bund yields starting to see a little bit of change. The 2-year basically flat, pairing that opening move. And then if you go further out into the curve, starting to see maybe a marginal, emphasis on marginal, tick higher. Max, I want to bring you back into the conversation here, because we are, of course, seeing this widespread rally when it comes to the German stock market. How much of this, though, as Anna pointed out, is an election standpoint, as opposed to maybe a little bit of short covering when it comes to some of these cross-asset moves?
Yeah, I think it's a bit of a move after the setback that we've seen late last week, right? So it's actually pretty normal behavior ahead of elections, more uncertainty, and then a little bit markets down, and then after the elections, it actually also happened in the US and other places, a bit of a recovery. So I'm not really sure that the election results are super constructive for markets. We think it's incrementally better than what we've seen, but we've been extremely bullish on markets into the year, and our DAX target was 23,000, and we're almost there. So I think a lot of this positive sentiment is already being priced in. So I would say elections, yes, short term, today's move is because of elections, because of a relief that we don't have a three-party government. But I don't think that the German elections is a game changer. Politics is one of, I think, 5 factors that are super important for markets looking forward. This factor increasingly being priced in.
Max, well, one of the kind of European playbooks that we've seen in terms of sector outperformance, I'm going to argue this is in the States as well, is fiscal spend in particular sectors. I'll give you an example. In the United States, the chip sector went gangbusters over in the U.S. simply because they got those federal grants from the Biden administration. We've seen similar things happen in France, in Spain, in Italy as well. Is that perhaps the expectation that, yes, there's the politics piece, but that the fiscal spend may be coming strongly into the defense sector of Germany? How much room does that have to grow?
So we do think that there'll be more spending on defense. We think GDP, part of GDP will be 2.5% spending on defense, so increase in spending. On the other sectors, I think there's actually less wiggle room than we might have hoped for a week ago, because the centrist party majority, that means they can't really change the debt brake unless they make big concessions to the far right or far left. So I actually don't think that as a result of the recession of the elections, we'll see a lot more fiscal spending. I think that's actually a little bit of a disappointment from what we've been seeing yesterday night. So I don't think that we'll see a lot more spending on chips, etc. What we probably are going to see is a relief on energy costs. There's a big agreement that energy costs need to come down in Germany. So, if you take off the energy, the tax that's increasing the energy cost, that'd be about 7% less energy cost. That'd be pretty positive for energy-intensive industries. I think the result that we got this morning is positive. For the other sectors, I don't yet see the big impacts. I think we'll have a lot more clarity once we have the coalition agreement. Then we will know what, for example, the policies will be on real estate. The CDU doesn't want any rent controls. That'd be very favorable for real estate. The SPD is in favor of rent controls. They want to prolong what we already have, so that'd be pretty negative for real estate. We can go over all those sectors. I think we'll have a lot more detail in about 6 to 7 weeks when we have the coalition agreement. For now, it's too early to make conclusions from yesterday's result on sectors.
Maximilian, if we broaden the conversation a little around European stocks more broadly, I caught up this morning with the CEO of Prosus, Fabrizio Bloisi, and he was talking about how he thinks that European tech companies are undervalued. He's made a bid for a play for a European tech company this morning. I just wonder whether M&A that lifts the value of European stocks is something that you are looking to. Is that a theme that you're going to be playing in 2025?
Yeah, so lots of things that really still speaking in favor of European equities, right? They've been outperforming 10%. I think that can continue, not at the momentum that we've seen in the first weeks. M&A is certainly one of the drivers, and we think that will pick up. But if you look at, and why is that going up? Because valuations are still pretty attractive, right? If you look at the valuation differences, US versus Europe, they're still very attractive, especially if you compare that to rates also. Rates differential enormous. We see great earnings momentum. We've seen 8% beats versus expectation in European earnings. And economic data, and we've seen that on Friday, are also pretty stable, right? So we have basically flat PMIs on Friday in Europe and 3 points lower PMIs versus expectations in the US. So this Europe versus US play is still working, favorable for Europe and favorable also in absolute terms for Europe. And I think 2 more things that could drive this rally a little bit further could be a ceasefire in Ukraine. On this one, unfortunately, we have very little certainty. And also, don't forget that in 2 weeks from now, we have the NPC in China. And they will be discussing potential stimuli for the economy. Now, if that is perceived as being better than expected, that'd be another favorable driver for Europe. So yes, M&A is one part of that, but just one part of many, I think, positive drivers for European equities.
Well, staying on China, Maximilian, of course, over the weekend we had Donald Trump upping his threat of tariffs on Beijing. What if China can't sell its products into the US and so instead floods the European market? Surely that would undercut some of the European companies we're watching on the Stock 600.
Yeah, I mean, that's certainly a risk. I think we've had that discussion now since Donald Trump's first term, right? Exactly that. More tariffs mean that we'll have more Chinese imports into Europe. didn't really happen as bad as people expected. It's a little bit of a threat, maybe driving inflation lower, which again would be positive for the rates differential. So driving inflation lower would mean more cuts. So I'm not convinced that this is across industries. We, of course, have this discussion in the auto industry, but also in the auto industry, it's not yet a game changer for earnings or for sales of European automakers in Europe. So I'm actually a lot less concerned than the current market perception of this topic.
Max, when it comes to ultimately the bull case for Europe, I'm going to zoom this out really enormously. What is the ultimate driving factor here? Is it a trade negotiation with the United States? Is it a tariff negotiation or overcapacity story with China? Or does it still come back down to the domestic politics?
I think domestic politics is one part. And I think you need three things for U.S. investors to step back into Europe. One is more political stability. I think we're moving in the right direction. We now have a budget in place in France. We now have a German government. Again, we don't have the two-thirds majority that I was hoping for, but at least we have a stable government. I think that government is here to stay for the next 4 years, so that should be good. That part, I would say, check. Increasingly priced in. I think those Chinese stimuli that we just mentioned, that would be the second big driver, especially from a U.S. perspective. I don't really see U.S. investors yet being invested in Europe. I think the rally that we've seen mostly came from European investors. So China would be number two. And then from the U.S. perspective, and that's actually pretty interesting because the perception is pretty different on the continent versus what we hear from U.S. investors. The ceasefire in Ukraine, from a European perspective, is perceived as less important. From a U.S. perspective, pretty important, because that kind of seems to imply low uncertainty in Europe and for Europe. So I think those are the three big things. On tariffs, we've been of the opinion that they are less hurtful for Europe. And I think part of why the PMIs last week, Friday, were so negative in the US is that people increasingly realize that tariffs are not just a problem for Europe, they're also a problem for the US. Imagine you're a US company and you need to now get your supplies 25% higher, which is not good news. If you're a consumer, imports are getting a lot more expensive. So I think that's a negative for both sides of the ocean. And I think markets are waking up to this.
Maximilian, thank you very much. Maximilian Euler, Head of European Equity and Cross-Asset Strategy at Deutsche Bank Research. Thank you very much for joining us this Monday, 24th of February. Let's get a check on some of the individual stocks that are on the move. Joe Easton has a briefing. Joe.
So a lot of action in these food delivery stocks this morning, Anna, particularly a lot of trading coming through in the pre-market auction on Just Eat Takeaway, but we did have a volatility halt on that one, struggling to get a price given. We're expecting to see a big jump in that one, but take a look at Prosus coming down more than 7.5% now. They will be paying out around 4 billion euros, 4.3 billion euros on that deal, and they already own a big stake in Delivery Hero, so that one coming up, potentially that will fuel a partnership between them, and we're seeing a feed through on Deliveroo here in London as well. Remember, a lot of these stocks beaten down post-pandemic, of course, so potentially a cut price deal, but a lot of action in those shares, and we'll wait to get a price on Just Eat Takeaway at the open. Then in terms of the other M&A story, it was over in Italy and also Norway as well. We've got this deal coming through, Saipem and Subsea looking to combine in an all-share transaction, and Eni in Italy also has a slice in that as well because they own a bit of Saipem, but we're not seeing a huge move. One of my colleagues did point out it's not a massive premium on that, but we are seeing, nonetheless, a bit of a move higher on those stocks. Then in terms of electrification, this one very interesting. We're seeing Schneider Electric dropping almost 5%. It's a massive company, of course. And also Siemens Energy. Now there's a report from an analyst over at TD Cowen saying that Microsoft seems to be scaling back on their data center investment, their capex, and that seems to be weighing on the electrification stocks here in Europe today. Keep an eye on those. But we are seeing significant losses. Schneider Electric, the biggest points decliner on that report around Microsoft capex this morning.
Joe, thank you very much. Joe Easton from our equities team joining us there with a look at some of those stocks on the move. We are monitoring a press conference that the AFD is currently running. We are looking now at pictures of one of the co-chairs, Tino Tripala. We've also been hearing from the AFD's other co-chair, that's Alice Weidel, talking about their willingness to move on debt rules or lack of it. Alice Weidel then repeating the AFD's opposition to loosening debt rules, and also repeating the opposition to a special defence fund. Really important to think about what the AFD will or will not vote for because of the ability of the AFD and De Linke to form some kind of blocking minority on some important policies ahead. We'll get more on Germany shortly. This is Bloomberg.
Is on. Everything you need to get the edge at the end of the market day.
Big tech earnings kick off later this afternoon.
Gilead is coming out right now.
We have Take-Two numbers. Back to the markets, right? Our bread and butter.
NVIDIA is one of the best stories in the tech space.
That actually matters a whole lot more.
It might shock some of your viewers.
You're watching The Close.
Get ahead of tomorrow's trading with The Close. Weekdays on Bloomberg. Context changes everything.
Middle East and Africa. Vibrant resources and high-yield investment opportunities abound. Join me on Horizons Middle East and Africa for the stories, newsmakers, and insight from this exciting region. Now weekdays, only on Bloomberg.
Listen carefully. Can you hear the rhythm in the markets? Not just in the syncopations triggered by inflation, but in the preludes leading to global elections, in the dissonance that moves the Nikkei, and the rising course conducted by AI. There's music in the markets, and if you want to learn to listen for it, we'll show you how.
Good morning. This is Bloomberg Surveillance.
Welcome back to the opening trade.
This is Bloomberg Technology.
This is the Asia Trade.
This is Wall Street Week. Welcome to Balance of Power.
This is Bloomberg Television. Welcome to the world of decentralized finance.
Massive outperformance from Bitcoin.
Bloomberg is covering all things crypto, the people.
The tectonic shift emanating from Washington.
All we're looking for is clear rules and an ability to build in the United States.
Crypto shouldn't be partisan.
The transactions.
Really a record-breaking moment.
Crypto VC is back.
And the technology.
It's really the beginning of a global on-chain economy.
And if America doesn't embrace it, we're going to be left behind.
Bloomberg Crypto, only on Bloomberg.
Bringing you up-to-the-minute geopolitical news whenever and wherever it happens. I'm David Gura in Rio de Janeiro, Brazil, and this is Bloomberg.
Let's get back to the corporate reporting now. The Swiss construction and materials company Sika reporting full-year results that met expectations alongside an upbeat outlook for the year. I'm pleased to say we're joined now by Thomas Hasler, CEO over at Sika, and he is with us around the table. Good to have you with us, Thomas. Let's start with your outlook. So it is generally rosy, but one gloomy spot is for European autos, which of course matters for Germany, a market we're talking a lot about this morning. Just talk me through why you're braced for a difficult year ahead there.
I think the circumstances haven't changed overnight, and the automotive industry in Europe is challenged by confusion about the future direction. That the transformation to electric is stalling, and so we have a very low, let's say, build rate, a very low consumer confidence that is also this year indicating low volumes in Europe especially.
And Thomas, I know that you've increased your exposure to the German market recently with some of the M&A that you've been doing, so with MBCC buying that German business. So as a business that operates in Germany as well as lots of other countries around the world, is it important to you that you get government formed quickly? Is that the kind of certainty that business is looking for in Germany?
Our German business is significant. It's the third largest country after the US and China. It's the locomotive of our business, like it is the locomotive of Europe, I would say. We have a strong organization that is ready for the year, but with the election, I think we see some clarity that hopefully will stimulate also that some of the backlog will be released.
And you're set to benefit from the reconstruction of Ukraine, I see. How are you planning ahead for that? There's such a big opportunity if we can get peace in the country.
Yes, we are active in the Ukraine. It's a rather small organization there. The bigger impact of peace in Ukraine is probably on Europe itself. The confidence, let's say the insecurity that is still all around would fade and probably stimulate, again, consumer confidence. The outlook would be more positive. It's more in Europe than in the Ukraine. But we are in the Ukraine active, and definitely there would be much more construction taking place.
Thomas, you have a third of you mentioned that Germany is the third largest business behind the US and China. I think a third of your sales come from the Americas, at least. What is your expectation about the US construction sector then? Because we have, there's a lot of people excited perhaps by growth, but on the other hand, there could be tariffs making certain things more expensive. How are you looking ahead to 2025 in the US?
I just came back from Vegas, from the largest fair, construction fair in Vegas, and the atmosphere is euphoric. It's super positive. The infrastructure spend is expected to further rise. So I would say very, very positive. On the other hand, you hear constantly, we have so many projects, but we can't execute because we are missing labor. So this is the flip side, that eventually a lot of what is announced cannot be put in place because of missing labor. So we have here a very positive industry, at the same time a very limited, challenged industry.
Well, Thomas, if you were in Vegas, are you going to bet more on the US to try and get round the tariff threat from Donald Trump? You're going to invest in more business in the US?
Actually, we have been spending a lot capex to the US in the last years, and we are going to continue. We have almost an autonomous situation there. We produce in the US for the US. We buy locally. So we are investing into growth, and the US market is growing steadily also in the past, and we expect a little bit more in the future. So we are going to also allocate capex according to the growth potential.
Let me ask you about China then. That's the one part of the world we have perhaps not touched on. What are your expectations for China? How much visibility do you have there? We're expecting perhaps some more fiscal boost in China, but then the geopolitics gets complicated.
Yeah, China is complicated, and we also expect that it will be still this year challenged. I mean, this fiscal boost that you mentioned have not turned into actually economical confidence of consumers, and I think this is the lagging factor. There's a lot of money, but it is safe put aside. We have a continuous, let's say, decrease in residential housing prices, which is indicative of the consumer confidence still not re-established. And that has for us an impact, and so therefore we are a bit more, let's say, cautious about China in the near term.
Thomas, thank you very much. Thank you for joining us. Thomas Hassler, the Sika CEO. Lizzie, we have some movement on Just Eat Takeaway.
It's more than movement, Anna. Just Eat shares up 53%. They were up 55% at one stage. This off the back of the news that processes to buy Just Eat in this $4.3 billion cash deal. You're also seeing a little bit of a gain for Deliveroo and Delivery Hero, but woof, what a move for Just Eat shares this morning. We're going to get back to the geopolitics, though, later in the programme. The EU ramping up support for Ukraine as President Zelensky says he'd step down in exchange for peace. We'll have more on the third anniversary of Russia's full-scale invasion next. Stay with us. This is Bloomberg.
Why does this business model work? Because it's virgin space. It's never been done before, and it'll never be done again. When you step back and you look at something that's been golf through institutions, has been the way it has been for 53 years without change. In 1993, I stepped back and said, okay, this is not right. It's doing the same old Groundhog Day. Everything's the same. Players are a pass-through entity. They're not getting any equity built in their day. Once they're done playing, they're out. I thought, that's just not right. When you have to build a sustainable model, you need to have these players, these famous, the world best, the best of the best. You need to give them equity into the future. You need to give them a vision of where they need to go and how they're going to get there.
Jumpstart your trading day on Bloomberg Open Interest.
2 hours of single stock stories that are driving the opening bell action. We'll take you to Wall Street, Main Street, the C-suite, and beyond.
These are companies that are growing their market.
The great companies in the U.S. are the companies hitting the cutting edge. That's a different story.
Get the inside track on what's buzzing in markets.
With the players who are shaping the narrative.
If you have bad earnings reports, you're going to get punished.
They're not buying what the industry is selling. Join us on Bloomberg Open Interest every trading day, only on Bloomberg.
From our studios in New York and San Francisco, our expert hosts have the data and analysis from the companies you know and the startups to watch, plus the interviews you don't want to miss. Watch Caroline Hyde and Ed Ludlow on Bloomberg Technology, the only daily business show dedicated to tech, right in the middle of the trading action. Live every weekday, only on Bloomberg Television. Context changes everything. From the world of politics to the world of business, Joe Matthew and Kaylee Lines deliver news, insight, and analysis live 2 times a day, every trading day. Balance of Power at 1 and 5 Eastern, only on Bloomberg.
Welcome back to the opening trade. 30 minutes into today's session, and they might have been late to open, but boy, did they deliver. We're looking at Just Eat shares up 53% this morning on the news that Process is to buy Just Eat Takeaway in this $4.3 billion cash deal. It is the tech investor's biggest deal today as it pursues new growth opportunities. And you're also seeing a bit of a spillover effect for the likes of Deliveroo. They're up 4%. Delivery Hero also up 4.2%. So those shares really gaining off the back of that M&A news this morning, Anna.
Yeah, so a bit of M&A news flow. Overall, though, markets seem to be fading the optimism around the German election. The DAX now up by just 0.25%. Let's pivot our thoughts to geopolitics this morning. Ukraine's president has said he is prepared to step down in exchange for NATO membership for his country. Volodymyr Zelensky was speaking in Kyiv yesterday ahead of the 3rd anniversary of Russia's full-scale invasion today.
To achieve peace, if you really need me to give up my post, I'm ready. I can trade it for NATO membership if there are such conditions. I am focused on Ukraine's security today, not in 20 years. I am not going to be in power for decades.
Let's get more with Bloomberg's Russia government editor, Greg Sullivan, who joins us now. And there's plenty of news flow over the weekend. Then, Greg, we've heard from Volodymyr Zelensky, as we just said there. We heard from plenty of US voices failing to mention Russia as the aggressor in the war in Ukraine. It's clear that Trump's taken a real turn against Ukraine. Where have we got to on the negotiations? A lot seems to focus on the potential for a mineral deal and whether that will include any security guarantees.
Absolutely. I mean, it's clear that Zelensky's comments are, in fact, a response in many ways to Trump labeling him a dictator and all the pressure that the U.S. administration is putting onto him. But they're interesting in another way because they do point to a fundamental issue here that will be the sticking point for any negotiations, and that is the security guarantees that are needed to stop the fighting and keep it stopped. Zelensky himself said that that would be NATO membership in these comments, but Russia has ruled out NATO troops on Ukrainian land. The U.S. has also ruled out putting boots on the ground. So that really leaves a big issue here, which is how does Ukraine deter Russia and what kind of viable security guarantee is going to come? And right now, that's just not clear as we see.
There is talk, at least from some of the major European kind of countries who do have a little bit more military capability, like the UK, France, for example, even Germany, of talks of a reassurance force, as they're starting to call it. Conversations happening in D.C. this week with Emmanuel Macron and, of course, Keir Starmer as well. Is that enough for Europe to get itself off the sidelines?
Well, that's the real question. We've seen Europe really rushing to try to coordinate a response and get themselves together. As you said, there are these negotiations about a reassurance force. There's also talks about a defense package to provide aid to Kyiv in roughly the form of 20 billion euros. The timeline for that remains a bit uncertain still, but we do know that the Europeans have called an emergency meeting on March 6th to discuss aid to Kyiv and the bloc's own security. So they really are trying to step up and provide that security, but it's unclear if Europe alone can fill a gap should the U.S. pull back. But again, that is a major issue in how any kind of resolution to this conflict comes to be.
And meanwhile, what comes next for the US-Russia talks? We're waiting for this Trump-Putin meeting, Greg.
Well, that's also interesting. Over the weekend, we saw that Russian President Vladimir Putin appointed Kirill Dmitriev as he's the head of the Russian Sovereign Wealth Fund as a negotiator for foreign economic cooperation. He was involved in the first round of negotiations in Riyadh, but what's interesting here is it does appear that Putin is stepping up and putting a businessman envoy to kind of meet Trump's own businessman envoy, so potentially a bit of creative approach to negotiations with the U.S. But as for now, the two sides are trying to come up with a way to hold more talks between officials from each country. Trump obviously still wants that leaders summit, but it's not necessarily in Putin's interest for that to happen fast as he makes battlefield gains. So that's the next question, is if and when a potential leaders summit could be.
Okay, Greg Sullivan, Bloomberg's Russia government editor, we thank you for that update. And I want to continue this conversation now. The European Union rushing to secure a 20 billion euro package of military aid for Ukraine. And the bloc's going to hold its emergency summit on March the 6th, following the about turn that Greg was talking about in US policy on the war. Let's speak now to Esther Sabatino, who's a research associate for defence and military analysis over at the International Institute for Strategic Studies. Really good to have you with us, Esther. Do you see the EU's defence structures supplanting NATO in time?
This is a very prominent question. Let's say that European countries are trying to go towards that direction, but we can also see that they are really struggling and lagging behind. I would say that there is the clear perception that they now have to act, but when it comes to devoting the right resources to that, that is still problematic. If you look at the NATO expenses, for example, for the last year, NATO EU members accounted for only 1/3 of the expenses that occurred at the NATO level. And so, of course, that already replies to your question on how much Europeans can speed up and really be at the level necessary to provide defense in Europe.
I suppose as we factor in the AfD's performance in the German election overnight, if you're going to integrate European defence, how do you prevent what's happening in NATO happening to this European alliance? You know, one US election has upended the world's assumptions about defence. Another German election, for example, could do exactly the same.
We will see also how the coalition government will be formed. But what we can already see is that Germany, at least Friedrich Merz is really determined to put a further strength to the European projects, and particularly to strengthen defense. We can also see that this is particularly in line with other countries in Eastern Europe, but not only. What will need to be done, I would say, is to find two different types of agreements. On the one hand, you will need to really try to find the political will to eventually also find the right architecture for Europeans to intervene or to provide the security guarantees that are being talked about in the last days. But on the other hand, you will not also need to find the proper way to produce together what European countries are missing. There are already the structures available at the European European level. What has been missing so far is the political willingness to really act at speed to increase defense capabilities in Europe. So it's not only something that is dependent on Germany, I would say, but of course it will need to have the agreement of the 27. And this is the biggest problem of the European Union when it comes to defense, because of course it is the combination of the 27 members, the willingness of 27 member states. So actually what could happen and what could also speed up the process would be to have sort of coalitions of the willing inside the EU, or groups of countries that are determined to act at a faster pace in Europe to improve the capabilities of European countries. And if I think about this kind of setting up, the countries that I would say would need to be there would be for sure France, Germany, Italy, Spain. So in a way, the countries that have been promoting defense, but not only, also Poland in this regard is extremely relevant, as we saw in the last years that Poland really increased its defense spending and investment.
Esther, can I ask you about the negotiations from a defense perspective, the negotiations that are taking place around Ukraine? The US administration is offering what it calls economic security guarantees instead of some kind of military guarantee. I wonder if the two can get to the same page. Do you see any way that the Trump administration coming with what looks like a business deal and the Ukrainians wanting security guarantees, can they find common ground?
Funding security guarantees from European countries, we already saw what the reaction from the Russian administrations were. So they already said that they were not willing to accept any presence of NATO members to have these guarantees. So that is already something that is extremely problematic. I will also say that having a security guarantee that is disconnected from the economic agreement as well as from the support of the US would risk up to a certain extent not to provide that certain guarantee that Ukraine is looking for.
Well, Esther, talk to us about then not only the security guarantee in Ukraine, but this is coming at the same time that Donald Trump is talking about removing a military presence, an American military presence, specifically right here in Germany. How does that square with the economic interests of Ukraine? Can they both exist, or is it one or the other?
This is a complex question to answer. So we also saw actually over the weekend that there were some reassurances on the presence at least of US soldiers on Poland territories. And that, of course, it means that Trump is not going to leave 100% the European soil. So up to a certain extent, there will be a sort of guarantee. Of course, the farther west these guarantees are going to be the worst in a way it is to ensure the security guarantees for Ukraine. But I think that now the central of the discussion and of the negotiations would need to be exactly on finding ways to ensure actually that not only Europeans but also the US in the way that they will negotiate and agree upon will be present in Europe to have that security guarantees apart from economic support that might be needed.
Esther Sabatino, Research Associate at the International Institute for Strategic Studies, we thank you so much for breaking down kind of the geopolitics around the Ukrainian story and where Germany falls into all of that. We thank you so much. As we were speaking to Esther, we've seen the DAX completely pair its opening gains. It had opened over 1%, some of it thinking a little bit of an election risk rally. You are now seeing it flat on the index. Looking under the surface of what is actually moving the DAX, you are seeing quite a bit of movement in the defense sector. That's the part of the market that is continuing continuing to rally right alongside the auto sector as well. Does this change the game in terms of policy there? Where you're seeing the underperformance is in a lot of the growth picture. SAP, Deutsche Bank, Adidas, even some of the consumer-facing stocks, the energy stocks, or even some of the idea that you are starting to see in Infineon, for example, that having a little bit of a read-through and that dragging down the entire index. But when you're looking at Volkswagen, Mercedes, BMW, Porsche, the names on your screen right now, they are continuing to climb. I wonder how much of that is really a function of policy expectations and fiscal spend coming out of this new German government. Coming up on the program, we're going to dive into more of that coverage and the election impact. Stick with us for that conversation. This is Bloomberg.
In recent years, you created an institute, the Jane Goodall Institute, and what is that designed to do?
Well, that was started in 1977 when by then I had a little research station and 4 of my students were kidnapped and everything shut down. And so some friends of mine said, well, let's start an institute so that this research can carry on. Bless them. So that was 1977, and it was set up to study, conserve chimpanzees and other animals and educate. And it's developed since then. So it's, you know, we've got 27 Jane Goodall Institutes around the world. And then I realized at some point that the African people living in and around chimpanzee habitats right across Africa were struggling to survive. There was crippling poverty, lack of health and education, moving deeper into the forest, being exposed to diseases like Ebola and HIV from the chimpanzees and vice versa. It hit me. If we don't help these people to find ways of making a living without destroying their environment, conservation won't work.
Key investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories. Insight with Haslinda Onen, only on Bloomberg.
It's a multi-trillion-dollar industry. We'll show you what's happening in ETFs like no one else. ETF IQ, only on Bloomberg.
We can also think about increasing the amount of financing instruments that we have together. We already have quite a few, and we've always been open to increasing those. But what we don't support is to just flat out say we're going to mutualize debt to finance something that is not defined, or something that decision-making stays at the national level, but the financing at the European level, that just creates asymmetries that make no economic or military sense.
The German finance minister there, Jörg Kuki, speaking to me about the prospect of the joint EU debt issuance following the German election. We know this has been a key point when it comes to whether or not Germany wants to basically be responsible for this defense spending. The immediate idea was this is how you raise funds for a lot of the European Union to then, as a whole, invest in defense. But as you heard it there, Jörg Kuki is really kind of reflecting the mood here in Germany, which is if Germany can contribute to it and those defense decisions are made on the national level, why should the funding be bought on an international level at the level of the EU? So he's vouching for the idea of individual projects that can then be funded by individual governments. And that is his argument. But critics of that would say Germany is always slow to come to the table when it comes to kind of these coalition moves, not just domestically, but internationally as well. This was happened in the 90s with the adoption of the euro. Germany was slow to adopt it for these very same concerns. Why should one country be responsible for the whole? And it's that same parallel that's happening now. This is also coming, of course, in the context of when Germany and, of course, Friedrich Merz, the CDU-CSU party leader, due to be the next chancellor of Germany, is looking to really build and invest and modernize the military while also cutting some of the more domestic costs around energy, immigration, and, of course, some of the wage pressures as well. So there's a lot going on in the German political space, both intrinsically and externally. Let's bring in a true expert, Tu Nguyen, Deputy Director of the Jacques Delors Center and board member of the Civil Society Network European Movement Germany, joins me this morning, too. A pleasure to have you on this program. We're dealing with a lot of kind of news flow and agenda items when it comes to what this new German government wants to accomplish. What do you think is going to be the easiest thing for them to check off this laundry list?
Good morning. From Berlin, I think there is no easy thing to check off the list. We are now, right, the day after the elections. I think the first step will be how to form a coalition that can actually govern and that is stable and efficient and that can come into office quickly. And there will be quite a few diverging points between the CDU and the SPD, which is actually the only politically viable coalition option at this moment. Migration will be a difficult topic. The economy will be a difficult topic. I'm hoping that at least on defense, there will be a quick consensus between the two parties, perhaps even before the coalition comes into place, because this is the most urgent topic that needs to be tackled.
You think there could be a quick consensus on defence, too? Good to see you. Thanks for joining us. What about the view of the AfD and Die Linke, though, and the fact that they might have different views on defence and they could perhaps block a reform of the debt brake if they thought it was going to be used for defence spending?
Indeed, I think this is one of the pressing questions. The way the parliament is now constituted, the CDU, the SPD and the Greens do not have a two-thirds majority to reform the constitutional debt brake, which very much limits the spending of the government, including defense spending. Now the big question is, will they be able to convince the left party, whose votes they will need, to carry either a debt brake reform or to introduce a special fund for defense? And I think this is an open question, will be a very difficult discussion. The left is in favor of a debt brake reform in general, for more investments in infrastructure, in climate and social policies, but they are very opposed to more defense and military spending. So I think this is something that will be a very difficult task for the next chancellor, who is most likely Friedrich Merz.
Good morning, it's Lizzie here in London. I wonder what you expect German policy on Europe is going to look like under Chancellor Friedrich Merz, and whether really he can play the role of leader of Europe.
This is the hope and the expectations on Friedrich Merz and on the next German government. Europe is facing immense challenges, and the previous German government has been somewhat absent in EU policy. And Friedrich Merz has stated his intention to take on leadership. He has, I think, a very clear vision of where he wants to take Europe, and he wants to take on the role for both himself and Germany to shape a united response by Europe to the Russian threat, but also to the policy shifts in the US. And again, I think a lot of this would have depended on whether he has a majority for a stable government. And at least in this respect, the election allow him to have a two-party coalition, or three-party if you want to take the CSU. And I think these are good conditions for him to take on the leadership role that he wants to take on and that everyone is expecting him to take on in Europe.
Let's circle back around to the international aspect of this, given that we still have so many of these threads of the domestic to follow in the weeks and months to come. How does Friedrich Merz's policy agenda square on the international front with the likes of Ursula von der Leyen, given that they have the same roots right here in Germany? Where are the sticking points in that relationship?
Yes, so the interesting aspect of this is that Friedrich Merz hails from the EPP, the European People's Party, the same party from which the European Commission President, Ursula von der Leyen, hails, and which is also the biggest party in the European Parliament, headed by Manfred Weber, also a German conservative. So we have three German conservatives in these three institutions. I think Friedrich Merz also intends very much to take on leadership within the EPP. He has said that he wants to use the majority of EPP leaders in the Council, European Council, to push forward European integration. He has been very vocal also, or influential also, on EPP statements. EPP leaders were in Berlin in January. The question is in how far there will be sticking points between Ursula von der Leyen and Friedrich Merz, because there is, I think, a difference in how they, for example, see climate and the European Green Deal. The European Green Deal was one of the flagship projects by Ursula von der Leyen in her previous term. Friedrich Merz very much campaigned on the necessity to put the economy before climate, and wants to deregulate a lot of the regulation or simplify the regulation, but also roll back the European Green Deal. And I think this might be an issue where there might be differences in opinion between the two.
Okay, and two, I wonder, so differences of opinion within Germany, but I wonder if this centre-right-led government takes Germany a little closer to the United States. I saw that President Trump congratulated Friedrich Merz on winning, on taking a higher percentage of the votes than anybody else in this German election. How significant is that for the US-German relationship?
Friedrich Merz has also, after the election, been quite clear on the need for the European Union to perhaps become more independent from the US. I think there was a fear that the US administration and the speech by Vice President Vance might support the AfD and might help them in the elections. This we have not seen so much. They have doubled since the last elections, but the polls have been quite steady. Otherwise, I think what is very clear is that we will have a central government, centrist government in Germany. So Friedrich Merz has very much ruled out to form a coalition with the far-right AfD, and is now looking to go into talks with the centrist coalition. And I think this is actually a very good outcome of these elections, that this is possible to have a two-party coalition in the center.
Okay. Tu, thank you very much. Tu Nguyen, a Deputy Director at the Jacques Delors Centre and board member of the Civil Society Network European Movement Germany. Thank you very much. Well, extensive conversation there about Germany then, Chrissy. Meanwhile, a lot of volatility in German stocks.
A lot of volatility. We started at the open higher by over 1%. We are seeing all of those gains completely paired this morning, but I think the nuance here is that we are still seeing some outperformance relative to some of the other European indexes. You're seeing it on your screen right now. The auto sector and the defense sector very much driving what a little rally there is much, much higher. The auto sector certainly on your screen there. The defense sector, Rheinmetall getting a lot of love this morning on the expectation that that is indeed where we're going to see a lot of the spending push as well. German Bund yields not moving as much, perhaps a little bit of caution given that we are going to be seeing this idea of a debt break or not. And then, of course, the euro strengthening to a 105 handle. Coming up on the program, we are going to have a conversation with the IFO president, Clemens Fuest, on the latest German business climate survey and the outlook after the election. That does it for the opening trade. The Pulse is up next. This is Bloomberg.
Bloomberg Invest is back. Join me, Shonali Basak, and the industry's most influential people for a comprehensive view across financial markets. Hear what a second Donald Trump presidency means for the economy, how AI is being monetized by investors, and the next big risks facing the private credit industry. Bloomberg Invest, March 4th and 5th in New York City. Register your interest to attend at bloomberglive.com/invest.
Bloomberg loves earnings.
I know it's like your Super Bowl, right?
I can't wait. It's like opening presents in the morning.
All right, it will be exciting.
Nobody covers earnings like Bloomberg.
Middle East and Africa. Vibrant resources and high-yield investment opportunities abound. Join me on Horizons Middle East and Africa for the stories, newsmakers, and insight from this exciting region. Now weekdays, only on Bloomberg.
The countdown is on. Everything you need to get the edge at the end of the market day.
Big tech earnings kick off later this afternoon.
Gilead is coming out right now.
We have take two numbers. Back to the markets, right? Our bread and butter.
NVIDIA is one of the best stories in the tech space.
That actually matters a whole lot more.
It might shock some of your viewers.
You're watching The Close.
Get ahead of tomorrow's trading with The Close. Weekdays on Bloomberg. Context changes everything.
There is this real momentum from Wall Street. We are basically deep in the European earnings season.
Take a look at how we're faring when it comes to Asian markets.
Listen carefully. Can you hear the rhythm in the markets? Not just in the syncopations triggered by inflation, but in the preludes leading to global elections, in the dissonance that moves the Nikkei, and the rising course conducted by AI. There's music in the markets, and if you want to learn to listen for it, we'll show you how.
Newsmakers and market movers. This is The Pulse with Francine Lacqua.
Good morning, everyone, and welcome to The Pulse. I'm Francine Lacqua here in Berlin. These are your top stories. Well, Germany's conservatives face a narrow path to power after winning the election. CDU leader Friedrich Merz says he'll form a coalition quickly to get the economy back on track. Now, the DAX outperforms its European peers as German stocks react to the prospect of increased spending under the Conservatives. Plus, as the war in Ukraine enters its fourth year, Volodymyr Zelensky says he'd step down as president if it guarantees peace and NATO membership. Now, we have a packed show, of course, live from Berlin, but first thing is first, let's also check what the markets are doing. Now, European stocks a little bit on the downside. Again, this is partly due to the results of German elections, which left mainstream parties short of votes needed to ease fiscal policy, but also lift the economy out of stagnation. A couple of other things we need to watch out for. Look, this week we have Eurozone CPI, we have rate decision from Israel, and of course we have earnings from NVIDIA. A couple of other things we watch that's very tied to the German election, not only euro-dollar, let's get to that, but a couple of other things. For example, the German 10-year yield at 2.463, euro-dollar 104.81. Now, Germany's conservative opposition leader, Friedrich Merz, faces intense pressure to move quickly to form a government. His center-right alliance won yesterday's election, but he'll need to form a coalition to govern. The preliminary tally showed the CDU-CSU bloc finishing ahead of the far-right Alternative for Germany and Chancellor Olaf Scholz's Social Democrats. Now, you can see the gains made by each party here. Now, Merz's alliance won about 28.6% of the vote, followed by 20.8% for the AfD. The SPD finished third with 16.4%. Well, Friedrich Merz has ruled out an alliance with the AfD, but he could form a two-way coalition with the SPD.
We ran a very tough election campaign. Nevertheless, this election campaign was really necessary. Also in the debate about the important and major issues of our country, about economic policy, migration, foreign and security policy, and internal security. But now we will talk to each other, and the most important thing is to reestablish a viable government in Germany as quickly as possible.
Now, for perspective and analysis, let's bring in Marcel Freitscher, the president of economic think tank, the DIW Institute. Marcel, thank you so much for coming on today. When you look at the proposition, actually, for the Grand Coalition, a coalition between the Conservatives and the Social Democrats, now looks like the most likely outcome. What does that mean to financial, of course, spending, but also reforms?
My fear is not much, because these are the two parties who have been in power for the last 25 years or longer, and oftentimes in that combination, if you look at the people who will form the new government, they're mostly members who have been cabinet members already before. And if you look at the promises they made in the election debate, they have basically promised to move back to the past, to keep everything as is. So they clearly have not campaigned on a reform agenda. And given that they are very much focused on the past, I am not that optimistic that we will see courageous reforms.
But, Marcel, I mean, mainstream parties also won't have the two-thirds majority needed for constitutional change. What does that mean for the debt brake? How complicated is it going to be for this country to find the money needed for defense spending?
Well, reform of the debt brake was never really on the agenda, a really meaningful change of the debt brake, because we Germans love the debt brake, and the best we can do is to circumvent it, to go around it, as the previous government has done with the special purpose vehicle, special fund on defense. My hope is the new government will have a special fund on investment and a special fund on defense. That's the best they can do, but again, the question is, will it happen quickly? Will they be able to, will it be big enough to be credible?
It just feels clunky, right? It feels clunky. The courts could get involved. Is, you know, Germany's, I get debt now more involved with the EU. I know we've heard from Friedrich Merz many times saying, look, he doesn't want to tap the ESM. Joint bonds seem to be off the table. But could there be a way that Germany, you know, lands itself closer to the EU to get this push?
My fear is it needs to get worse before that understanding sinks in. The mentality in Germany currently is we want to move back to the past. We don't want a stronger Europe. And there is not yet the understanding the best defense for Germany's interest is a strong Europe. And again, if you look at listen to Friedrich Merz during the election debate, he basically said, no, we don't want any of the major reforms. If you look at the reaction to the Draghi report, which came out last year, it was basically completely to say we don't want any of that, to reject all of the major proposals. But my hope is we look back to 2020, the Next Generation EU, which was created then. Now the challenge is a lot bigger than it was back then, and that realization has not sunk in. But once it will, my hope is that we will push forward.
Marcel, I mean, I was at the Munich Security Conference. I feel like there was a sea change, right? You're dealing with the Trump administration that's possibly more aggressive towards Germany. You had that J.D. Vance speech that put everything and should have maybe focused the minds. Have you not seen a sea change since the election of Donald Trump, even in Germany?
I would like to answer yes, but my fear is no. The debate has very much been on national politics. The European, the global dimension has not had much weight. People are worried about their own future, so they first look inward. But that needs to change, and the new government needs to have that courage to open up and to communicate very honestly to citizens. Look, the next 4 years will be tough. There will be economic hardship. Unemployment will rise. But that honesty has not been there, and that needs to change for Germany to go onto a reform agenda.
Marcel, thank you so much. Marcel Freitscher, the president of the DIW Institute, stays with us, and we'll have a good conversation also on foreign policy. Now, we're just getting some IFO numbers. Germany, February IFO business confidence coming in at 85.2. That's a touch below, but nothing huge, below the estimate of 85.8, just a touch below. Now, we're joined by Clemens Fuest, the president of the IFO Institute. Mr. Fuest, as always, thank you so much for joining us. Does the result of yesterday's election make necessary reforms of economic policy more or less likely than a week ago?
I suppose it's more likely because there is the prospect of a coalition just consisting of two parties, or three, taking into account that the Conservative Party consists of two, but basically it is two-party coalition. So I guess that was, in terms of having a government which is able to act, this was the best possible outcome. It was close, but we now have two parties that have cooperated in the past and that hopefully see the situation, the difficult situation of the country, and get their act together and form a stable government. I think, yes, the opportunity is there.
What are the third things the new government actually need to tackle?
In my view, the key issue at the moment economically is the fact that private companies do not invest or invest way too little. Private investment is currently 10% below the level of 2019, and that happens in a situation where we actually need more investment, or should expect more investment in decarbonization, investment in structural change. We urgently need new investment. We need more innovation, more startup companies, and we also need more willingness to work to supply labor. These are the area where the government has to start, in my view.
But Mr. Fust, how soon could any of the positive impacts actually materialize? And again, when you look at GDP growth forecast, it's not looking great. It could be as well below 1%. So how fast can some of the things, the good things that you're talking about, how fast could they kick in?
People are holding back investment, people are holding back spending because there is a lack of trust. So if the coalition negotiations do not last too long, and if the new government comes up with an agenda that inspires confidence, the situation could change in the second half of the year. So I think improvements could come about rather quickly, but that's a matter of inspiring confidence and trust. All will depend on the agenda of the new government. Of course, there is also the international environment where the new government has little or no influence. A lot will, of course, depend on what Donald Trump does. If there's a trade war between Europe and the US, things could go south. But as far as domestic politics is concerned, I think there could be an impact relatively quickly, because this is mostly about trust and expectations for the future. And if that improves, that could have a relatively quick impact on investment, on consumption spending.
But talking about these trade tariffs, judging by Trump's actions so far, how big of a risk are trade wars with Germany?
There certainly is a risk of a trade war in that case between the EU and the US. So Donald Trump has announced tariffs on cars, for instance. That would, of course, hit the German economy, but Europe as a whole. Still, the experience with Donald Trump is that, yes, there's always room for negotiation, and the EU is a big market, and Donald Trump understands that. So the EU could strike back credibly. And will strike back. So the hope is that the two parties will sit down together and come to reason.
I mean, it's very clear that Europe and Germany has to increase its defense capabilities. Could the German defense industry really benefit from that?
It could, but if we look at the industry at the moment, we see that a large part of it is already running at full capacity. It's not a very large industry. It is dominated by medium-sized companies. Rheinmetall is a large actor, but there are not many more. So what the defense industry needs is a clear, ideally multi-year commitment by the government, by the European governments, to spend more on defense. And in that case, they would invest and extend their capacity. I think that's what we need. And again, that will depend on a credible and multi-year agenda to spend more on defense.
Mr. Fust, thank you so much, as always. Clemens Fust there, the president of the IFO Institute. We have plenty more to come live from Berlin throughout the morning. This is Bloomberg.
Welcome to the world of decentralized finance.
Massive outperformance from Bitcoin.
Bloomberg is covering all things crypto, the people.
The tectonic shift emanating from Washington.
All we're looking for is clear rules and the ability to build in the United States.
Crypto shouldn't be partisan.
The transactions.
Really a record-breaking moment.
Crypto VC is back.
And the technology.
It's really the beginning of a global on-chain economy.
And if America doesn't embrace it, we're going to be left behind.
Bloomberg Crypto, only on Bloomberg.
Bringing you up-to-the-minute tech news whenever and wherever it happens. I'm Ed Ludlow in Las Vegas, and this is Bloomberg.
US tech is influencing global markets.
Technology is driving business across Europe.
Companies in Asia are betting on tech.
Jumpstart your trading day on Bloomberg Open Interest.
2 hours of single stock stories that are driving the opening bell action.
We'll take you to Wall Street, Main Street, the C-suite, and beyond.
These are companies that are growing their market.
The great companies in the U.S. are the companies hitting the cutting edge. That's a different story.
Get the inside track on what's buzzing in markets.
With the players who are shaping the narrative.
If you have bad earnings reports, you're going to get punished.
They're not buying what the industry is selling. Join us on Bloomberg Open Interest. Every trading day, only on Bloomberg.
We do have a very clear mandate. Friedrich Merz will be our next chancellor in Germany. Olaf Scholz is done. And that's the good news of tonight. And we're going to change course of Germany. We will bring back growth. We will end illegal migration. We will meet our security needs, especially regarding to NATO goals. So yes, that's a clear mandate for a change of policy.
CDU lawmaker there, Jens Spahn, speaking to Oliver Crook last night, shortly after the exit polls were released. Now, you also just heard the CDU promising to bring economic growth back to Germany, end illegal migration, and meet the security needs of the country. Now, let's discuss all of these claims and whether the election result is a turning point for Europe's biggest economy. Bloomberg's EMEA News Director, Ross Matheson, joins us. Still with us, Marcel Fletcher, the president of the DIW Institute. So, Ross, welcome to the program. Marcel, thank you so much for sticking around. I mean, first of all, Ross, there's been a lot of news, right, over the last 24 hours. If you even leave Germany to one side, President Zelensky has said, look, he's ready to step down if that means more peace. That is a huge, of course, new news from Ukraine. And then we have a number of European leaders traveling to Washington to convince Donald Trump to cool off, I guess, Ukraine.
Well, that's right. So if anything, this is a reminder that for Merz coming in as German Chancellor, there's a host of challenges on his plate, and they're going to be quite urgent. I mean, domestically, obviously, you've got fundamental questions around the German economy, but further afield, you've got a very fast-moving geopolitical environment where you've got a lot happening very quickly. As you say, you've got the French president over in the US meeting Donald Trump today. They're going to sit in on a G7 leaders call. We have Russia and the US holding direct talks about Ukraine to push a ceasefire. And Merz needs to get in there. And so he's got to form a government pretty quickly. He's obviously putting a time frame on it of saying, I want to do this by Easter, but that's still almost 2 months away. And this is moving to the point that, you know, the US president says he wants a ceasefire arranged for Ukraine by Easter. I mean, whether that's feasible still remains to be seen, but there's a lot of challenges here, and we haven't even talked about, you know, what does it mean for the relationship with China?
Yeah, I mean, many questions. And again, we were on air yesterday with the German special, Marcel, and you know, Friedrich Merz said the right things, saying no one's going to wait for us to do a coalition. But actually, 2 months, a lot can happen in 2 months. I mean, certainly if we look at the speed at which, you know, we saw everything moving since January 19th, can they get something done quicker to have a functioning government in the next 4 weeks?
No, that's not how German politics works. We Germans put everything on paper. A coalition agreement is very thick, that's very detailed. That's the way governments work. They put an agenda up front, agree on things, and then they basically, for 4 years, try to tick every box. And so I think there's pretty much no chance to have a working government, a new government before Easter. But we still have the current government. That's, I think, the best hope that Merz with Scholz currently, they really closely cooperate. There were a lot of fighting during the debate, but I hope they now cooperate better.
You hope or you think? Because it's a big difference. I mean, there's like EU leaders. Again, is it the legitimacy? Will Olaf Scholz go and speak in the voice of the CDU?
I mean, he can't, but certainly Olaf Scholz is a very professional politician. He will certainly make a transition easy, but still, if you don't have the chancellor, the new chancellor there, it's a completely different ballgame. So yes, the transition will be okay, but it will take at least 2 months for the new government to be there. And then I'm not, you know, it's good that Friedrich Merz has a lot of experience across the Atlantic, that he's very pro-American, but at the same time, he needs to engage more with Macron, with France, with Europe overall. And so far, he has not signaled that he's willing to do so.
What do you think, Ross, the dynamics will be like between President Trump and Friedrich Merz? Again, Donald Trump actually taking to Truth Social yesterday to write, I guess, his support and almost congratulate the CDU on the win. But Germany has also really been in the firing line of the president.
Well, that's right. So it's going to be a delicate relationship, as we were just hearing. I mean, in a way, you can see a scenario where Donald Trump and Merz do get on. They are both conservative in nature, and it looks like there's talks already about how they can, you know, talk at some point in the near future. But it's still a complex relationship because Merz has been a pretty avid supporter of Ukraine and sending missiles to Ukraine. In fact, he was the one pushing Olaf Scholz to do more and do it faster on Ukraine. So how does that play out in that conversation? Then, of course, you've got the question around tariffs. And, you know, obviously auto tariffs for Germany would be quite difficult for an industry that's already structurally floundering. And so how do you manage that in the conversation? Can Merz, for example, try and negotiate something specifically for Germany, but you're bound by the fact that you're in the EU, and so it's EU tariffs, and you don't really get passes for individual countries. So it'll be about developing a personal relationship with Donald Trump, but there are complexities there.
And as Roz was saying, what's critical is also how Germany will deal with China. What do we know about the Merz policies in dealing with the superpower?
Very little, because Friedrich Merz never really held a cabinet post, but the conservatives have been very critical of China in the past. But at the same time, Germany is a very weak negotiating position. So the asymmetry of dependence is so big. So Germany is so much more dependent on China economically, in terms of trade, in terms of direct investment, in terms of resources and commodities, that he will not have a very strong negotiating position. And again, the best Germany can do, the next German government can do, is form a strong coalition in Europe, strengthen European institutions, have a joint approach. And both Xi Jinping, the Chinese president, and also Donald Trump have been very good in conquering and dividing Europe, and to kind of push against that, that would be the challenge for Friedrich Merz.
Okay, thank you both for a terrific briefing. Marcel Freccia there, the president of the DIW Institute and Bloomberg's EMEA News Director, Ross Matheson. Coming up, investors are digesting the results, of course, of this German election, which left mainstream parties short of the votes needed to govern alone. We'll dive deeper into the markets next. This is Bloomberg.
U.S. jobs numbers are released. Bloomberg has the report under surveillance with crucial data and expert analysis at terminal speed. Nobody covers Jobs Day like Bloomberg. From our studios in New York and San Francisco, our expert hosts have the data and analysis from the companies you know and the startups to watch, plus the interviews you don't want to miss. Watch Caroline Hyde and Ed Ludlow on Bloomberg Technology, the only daily business show dedicated to tech, right in the middle of the trading action. Live every weekday, only on Bloomberg Television. Context changes everything. Bloomberg Surveillance covers the latest in global markets and the political events that influence your world. Join Jonathan Farrell, Lisa Abramowitz, and Anne-Marie Hordern, only on Bloomberg. Context changes everything.
Bloomberg Invest is back. Join me, Sonali Basak, and the industry's most influential people for a comprehensive view across financial markets. Hear what a second Donald Trump presidency means for the economy, how AI is being monetized by investors, and the next big risks facing the private credit industry. Bloomberg Invest, March 4th and 5th in New York City. Register your interest to attend at bloomberglive.com/invest.
Middle East and Africa. Vibrant resources and high-yield investment opportunities abound. Join me on Horizons Middle East and Africa for the stories, newsmakers, and insight from this exciting region. Now weekdays, only on Bloomberg.
Traders hoping that Germany's election outcome will see a pivot towards increased spending and reforms that could reboot the stagnant economy. Well, let's dive deeper into the market reaction with Bloomberg's Valerie Teitel. Hi, Valerie.
Hey, Francine, good morning. It's been a bit of a back and forth session when it comes to German equities. This DAX, yes, it's in the green, up 0.8%. But last hour, it had flipped all the way into the red, but we're in the green at the moment. Euro-dollar briefly went above 105 handle. We failed at that again. We're now trading back below 105 at 104.79. Still in the green, but those gains are pale in comparison to what we had earlier. If you flip on, let's check on some single stocks. German defense names in the green. Rheinmetall up nearly 3%. BMW, Mercedes-Benz also trading strongly, and mid-caps, Francine, are trading quite well in Germany in the hopes of some more economic reforms to come. We flip on, let's just have a check on the German Bund yield curve, because it's at the moment not expecting very much when it comes to further debt issuance. We're mostly unchanged across the curve. Francine.
Valerie, thanks so much. Valerie Teitel there with some of the yields we're watching. Coming up, as Friedrich Merz wins the German election, will he be able to reform the country's debt brake to unleash growth? Now, this is one of the main questions when it comes to defense spending. We'll have a look, of course, at the possibilities of what happens next in German coalition government building. Euro gaining on the German election. I'm also looking at U.S. futures. Look, they're rebounding a touch. This is Bloomberg.
I think one of the dirty little secrets of credit is that the businesses generally don't pay you back, right? The markets pay you back, M&A pays you back. So what is the most important thing is to always make sure that the borrower is worth more than the loan. And as long as the borrower is worth more than the loan, then it might be a rocky ride, but you're going to get your money back. And this world where there's these disruptive companies that have, let's call it 100, 200, 300 million of ARR, are looking to not raise equity capital, because of the fact that they raised it in 2021 or 2022, and no one really wants a down round. But there's a lot of capacity in the capital structure to have, let's call it a structured solution. We think that there's a lot of opportunity with those businesses.
The countdown is on. Everything you need to get the edge at the end of the market day.
Big tech earnings kick off later this afternoon.
Gilead is coming out right now.
We have take two numbers. Back to the markets, right? Our bread and butter.
NVIDIA is one of the best stories in the tech space.
That actually matters a whole lot more.
It might shock some of your viewers.
You're watching The Close.
Get ahead of tomorrow's trading with The Close. Weekdays on Bloomberg. Context changes everything.
Good morning. This is Bloomberg Surveillance.
Welcome back to the opening trade.
This is Bloomberg Technology.
This is the Asia trade.
This is Wall Street Week. Welcome to Balance of Power.
This is Bloomberg Television.
Bringing you up-to-the-minute financial news whenever and wherever it happens. I'm Michael McKee at the Federal Reserve, and this is Bloomberg.
Good morning, everyone, and welcome to The Pulse. I'm Francine Lacroix here in Berlin, and these are your top stories. Now, Germany's conservatives face a narrow path to power after winning the election. Now, the CDU leader, Friedrich Merz, says he'll form a coalition quickly to get the economy back on track. The DAX outperforms its European peers as German stocks react to the prospect of increased spending under the Conservatives. Plus, as the war in Ukraine enters its fourth year, Volodymyr Zelensky says he'd step down as president if it guarantees peace and NATO membership. So Germany's conservative leader, Friedrich Merz, has emerged as the winner in yesterday's election. Now, the CDU-led bloc now faces intense pressure to move quickly to form a government. Let's break this all down with Kriti Gupta, who is here with me in Berlin. So, Kriti, we finally have the numbers. The two parties could actually form a grand coalition. Now starts the nitty-gritty about writing everything, which party wants. Do we know the red lines?
We don't know the red lines yet, and this is, I think, the big kind of question mark in the air, because we know there's a long laundry list of what politicians, both at the SPD and at the CDU-CSU alliance, really want, and the Greens will throw in there as well, even the AfD: immigration, energy, military spend. Those are the three easy ones. The answer to each one seems to be loosening the debt brake a little bit and getting that fiscal spend in. But where that conversation starts and where it begins is really crucial. And the politics, the players are really important here, because the SPD and the CDU-CSU together don't have enough of a presence in Parliament to actually make this kind of rule change in the Constitution. That two-thirds majority that they need, they fall short. So the question here from the political standpoint is, what party are they willing to kind of partner with? Is it the AfD at the ultimately, where they've already ruled out they don't want to participate? Is it perhaps the hard left, or even the BSW as well? The FDP is now off the radar. Or do the Greens kind of come back to the rescue? And that partnership is perhaps where the talks begin.
Yeah, and the timeline is extremely important, because there's so much going on in the world with the U.S. president, tariffs, of course, what's going on in Ukraine. But it doesn't look like we'll have a functioning government before 2 months.
I mean, ambitious target for Friedrich Merz, right? By Easter, he says. But by Easter, so many things could happen. It'll be the first 100 days of the Donald Trump presidency. He's already in the States talking about what their military presence in the United States might look like, by the way, which is largely concentrated right here in Germany. So that, of course, is a sticking point as well. But the defense piece is crucial also. I think we had Helen Blackwell and Sharon Bell over at Goldman Sachs and BlackRock making the point that 70 to 80% of European defense spend is ultimately leaked back to Europe. You look at what the markets are doing. It's Rheinmetall, it's and other German defense companies that are kind of positioned the best and have been performing the best in the last 6 weeks, on the expectation that this is where Germany can kind of maybe pick up some of the underperformers that they've seen in the auto sector.
Kriti, thanks so much. Kriti Gupta there with the very latest, of course, on this German election. So mainstream parties short of the necessary votes to reform the so-called debt brake to unleash spending. Its opponents say the crisis-era measure has become a brake on growth and reform. Well, joining us now to discuss all of this is SPD candidate and economist Philippa Siegel-Glöckner and Volker Wieland, who is chair of monetary economics at the Institute for Monetary and Stability, of course, financial stability at Goethe University, Frankfurt. So thank you both for joining us. Philippa Philippa, let's start off with you. What do we know going forward about some of the main negotiations? If Germany needs to increase defense spending, what are the options and what's more likely to happen?
Yes, I didn't hear you. That was a question to me?
It
yes,
was to Philippa, but Volker, you can also kick us off.
Okay, it's my pleasure. I think the debt brake is a bit of a sideshow. I think what we need is an economic turnaround, which requires substantial deregulation, and that's possible. In terms of funding, I think the key need is for defense. And given how in just a week the geopolitical situation has developed, one can credibly claim that this is an emergency situation, and the debt brake has an emergency clause for exogenous events that are of significant financial impact on the budget. And so I think that would be the easiest way to raise funding for defense. But the main thing to turn around the economy is massive deregulation and a slimming down of the welfare state. I think deregulation is possible with the Social Democrats. The welfare state, that's a problem.
Philippa?
Yeah. Okay, now I can hear. Sorry. It's a bit hard to understand. Well, I think it's actually going to be very, very challenging financially. Because, yeah, as you said, we don't have the two-thirds majority in Parliament to reform the debt brake. That emergency clause has limits on it, and especially if the spending needs are structural. And I think it's going to be hard to argue that they are a one-off short-term. The US has basically said that, Europe needs to stand on its own feet, so we expect higher defense spending for quite a while. So we're in a very, very tricky situation financially, and it's not quite obvious how that's going to be resolved.
So how much more difficult does this make things, Philippa, after the election yesterday? And what is the right way of dealing with everything in defense spending? Does the EU get involved? Does the ESM have to be tapped at some point?
Yeah. I mean, EU spending would help if it was outside the German debt brake. So if it was common EU spending, and yeah, it wouldn't fall under our deficit limit, but that would be very, very odd, right, for a country that has a lot of fiscal muscle, that has the safe euro asset, that then it needs to go to the EU because it can't figure it out itself. So I really hope that we get to a constructive solution. And defense is one big thing, but we have huge investment needs in all other bits of the economy in order to return the economy to growth, to do everything we need to keep the country together, to renovate infrastructure. So I think we really need to find a domestic solution that works.
Volker, do you think that defense and investment will be reprioritized with the new government?
I think that's absolutely necessary. I disagree with Philippa. I think we actually have a situation where now the size of the government in terms of GDP is, 48%, close to 50%. It's risen 5 percentage points since Corona. And basically all that money goes into subsidies, it goes into more social spending. It hasn't gone much into investment, it hasn't gone much into defense. There's lots of room to reprioritize. And I do agree on one thing with Philippa. Over the longer term, defense is a long-term issue. So in the long term, it has to be paid for not by additional debt, but by either tax increases or spending cuts. I think in terms of spending cuts, that's possible as soon as the economy is growing, and that means reprioritizing when the economy grows so that the increase goes into defense and investment. Both are actually currently pretty small, between 1.5% and 2% of GDP. Adding another % of GDP to defense would be 40 billion. Just to put this in perspective, in the 80s, when I did my military service, we had 500,000 people in the army and in the troops in general, and we paid about 3.5% of GDP for that. So that's perfectly feasible if one reprioritizes spending and gets back to growth. And growth means deregulation. Growth doesn't happen because of more debt. Otherwise, we would have lots of growth, because since 2020, we had 4 years of an unlimited situation because of the emergency clause. So I don't think more debt and the focus on debt break reform, it's just not leading us forward.
Philippa, how much, I don't know whether you want to push back against that, but also how much do you think German defense industry and companies will benefit from the current environment?
How do you reprioritize? What do you do, right? You can't just take a magic wand and make social security spending go away. A lot of that is actually regulated by the constitution. So there's a constitutional limit on minimum what we need to give to people. That's actually what the court has said. So it's not like the government can just halve that. The one thing they can do is they can produce amazing growth numbers and put people back into jobs, and then social security spending can fall. But none of these numbers are in the dimension that we need. So I think it's actually going to be very, very tricky for the new government to find the money they need. Maybe just to show you the proportions, the government at the moment has between 40 and 50 billion every year for basically all projects they want to do. So around about 10% of the budget. The rest is in existing kind of legal obligations and personnel costs. And 40 to 50 billion, that is much less than the investment gap we have. The last government already fell short by 25 billion, so the math just doesn't add up. I think that's wishful thinking. Are German companies set to benefit from this new drive into defense? Yes, but only if we find the money. And one thing that the debt brake introduces is massive insecurity, because we never know whether the money is there in the next year. Now, as a defense contractor, you're not going to expand your capacity if you don't know whether the money is there. So what we really need is secured long-term financing.
Philippa, how quickly do you think this country will have a new government? How quickly can the negotiations for a coalition take place? Is 2 months earliest that we can get it done, or will it have to be delayed?
Well, I think they better get it done.
Let me ask Philippa, Volker, and then I'll come to you afterwards.
Sorry. Yeah. That is very, very quick. Since Friedrich Merz hasn't led a government yet, it's very hard to know how he negotiates. But my hope really is that everybody gets together quickly and does this quickly. The threat is pretty imminent, and we need to do something.
Volker?
Yes, I think we have to really arrive in reality, and the reality is not that we are in a easy situation which can be solved with a bit more debt. We need a complete turnaround in economic policy. The sooner the Social Democrats realize that, the better. So maybe Philippa can help there, as she's a member of the Social Democrats. But the current policy of the last and even the predecessor government has basically failed. And if you don't start massively deregulating, you don't get back to growth. You know, that's the key step first. And if you keep saying that, oh, nothing can be changed because it's all somehow pinned down in laws, and then you're not going to change anything. And if that's the position the Social Democrats will take, this will really mean more years of stagnation, and Germany can't afford that given the international challenges we're faced with.
Yeah, well, I guess it takes two to tango, but Philippa, do you want to answer that, and then we'll move on?
Yes, I do. I think when we talk about starting from reality, it's very important to actually do that and to look at very specific numbers. And that's what I'm missing a little bit. I mean, it's nice to say that in abstract we slashed the state, but then tell me where, give me the numbers on which areas and what the magnitude is. Jens Spahn proposed one reform last year, or one set of spending cuts, concrete spending cuts. The estimated savings from that were 10 billion. If you only took the constitutional ones, it was about 5 billion. Now, 5 billion is nowhere near what we need at the moment. So let's be specific and talk numbers.
Yeah, of course. Happy
Okay,
to.
we'll talk a lot more numbers. Exactly, we're going to do this again, maybe in person, so we hear ourselves better. Philippa and Volker, thank you so much. SPD member Philippa Sigurd-Glück now there, Volker Wieland from the Institute for Monetary and Financial Stability. Coming up, we'll have plenty more in Germany, but also Microsoft has begun canceling leases for a substantial amount of data center capacity in the U.S., raising questions whether the tech giant is growing cautious about demand. We'll bring you that story next, and this is Bloomberg.
Listen carefully. Can you hear the rhythm in the markets? Not just in the syncopations triggered by inflation, but in the preludes leading to global elections, in the dissonance that moves the Nikkei, and the rising course conducted by AI. There's music in the markets, and if you want to learn to listen for it, we'll show you how.
Get your fixed income fix. Watch Bloomberg Real Yield around the world right here on Bloomberg. Context changes everything. From the world of politics to the world of business, Joe Matthew and Kaylee Lines deliver news, insight, and analysis live 2 times a day, every trading day. Balance of Power at 1 and 5 Eastern, only on Bloomberg. Welcome to the world of decentralized finance.
Massive outperformance from Bitcoin.
Bloomberg is covering all things crypto, the people,
the tectonic shift emanating from Washington.
All we're looking for is clear rules and an ability to build in the United States.
Crypto shouldn't be partisan.
the transactions,
Really a record-breaking moment.
Crypto VC is back.
and the technology.
It's really the beginning of a global on-chain economy.
And if America doesn't embrace it, we're going to be left behind.
Bloomberg Crypto, only on Bloomberg.
Many of the technology companies in Europe, they should be valuing more and they should be investing more. So I think this is the right price for the Just Eat shareholders because we're paying a good premium. But at the same time, as I just told you, the leader company in China is a $100 billion company. The leader company in the US is a $100 billion company. We are investing in Just Eat at the right price based on DCF. This is the right price to create a real big global leader.
The Prosus chief executive Fabrizio Blasi there speaking to Bloomberg about the company's $4.3 billion cash deal for Just Eat Takeaway. Now, if you look at the share price, this was an interesting deal. I have to say it's a massive deal. We also spoke to Blasi in the last couple of months. Now, all cash deal intraday, you can see Just Eat really flying 52% higher. Prosus a bit under pressure, 7.1% lower. Now, Microsoft has begun canceling leases for a substantial amount of data center capacity for building AI data centers in the U.S., a move that may reflect concerns about whether the company is actually growing cautious about the outlook for demand. Now, that's according to an analyst at TD Cowen. Well, joining us now from Hong Kong is Bloomberg's Peter Elstrom. Peter, as always, so good to speak to you. So what's going on with Microsoft's data center spending?
Yeah, well, just to step back a bit, Microsoft has been one of the big technology companies that is investing the most in AI and AI data centers in particular. They've talked about spending $80 billion this year on data center capacity. So this note from TD Cowen really raised a lot of questions. They said that there's evidence, they did some channel checks, they said that there's evidence that Microsoft has been canceling leases at data centers, totaling a couple hundred megawatts of data. They also said that they're stopping something something called SOQs, the Statement of Qualifications, which is sort of the step before leases. In other words, they're pulling back pretty dramatically from some of their data center commitments in the U.S., and they're reallocating some of the spending that they were planning on doing internationally into the U.S. And overall, the analysts asked the question of whether Microsoft is getting concerned about whether AI is going to live up to the hype, whether in fact companies like Microsoft are pulling back a bit because they have not seen the pickup in demand for data centers. Now, to be clear, Microsoft has not confirmed this. They haven't talked about these details. We got in touch with them, and they said they still are planning on spending that $80 billion through the end of their fiscal year, which is coming up in June. They didn't talk about what they're doing after that, but they said they're definitely going to spend that amount now. So it does raise questions about where exactly Microsoft is spending this money, what it means, and what the long-term demand for AI is going to be.
Yeah, and this, Peter, I guess suggests a material slowdown in international leasing. What would be the repercussions for tech in general, but also beyond?
Well, we've seen these fears ricochet through the market pretty rapidly. Of course, there's hundreds of billions of dollars being spent on AI capacity right now. Microsoft is just one of the company. Meta, Amazon, Alphabet. We saw OpenAI and Stargate talk about spending $500 billion on capacity. So these are huge amounts of money. That money is being spent at companies like NVIDIA in particular to buy their chips, to put them into data centers. There are real estate deals that are behind this. So there's a whole ecosystem, which has really been the biggest boom area of technology over the past few years. That's fueled the stock market boom, too, where you've seen NVIDIA race to a $3 trillion company. So if this spending starts to falter, if you start to see people begin to believe that AI demand is not going to live up to all this hype, maybe they don't need to spend hundreds of billions of dollars, maybe it's a bit less than that, that's going to take some air out of this bubble pretty quickly.
Peter, as always, thank you so much for the terrific briefing. Peter Elstrom, who leads our global tech coverage. Coming up, we're back, of course, here in Berlin. Germany's conservative leader, Friedrich Merz, lays out plans to form a coalition government by Easter. We'll have more on what that could look like and what it means to the debt break next. This is Bloomberg.
Jumpstart your trading day on Bloomberg Open Interest.
2 hours of single stock stories that are driving the opening bell action.
We'll take you to Wall Street, Main Street, the C-suite, and beyond.
These are companies that are growing their market.
The great companies in the U.S. are the companies hitting the cutting edge. That's a different story.
Get the inside track on what's buzzing in markets.
With the players who are shaping the narrative.
If you have bad earnings reports, you're going to get punished.
They're not buying what the industry is selling. Join us on Bloomberg Open Interest every trading day, only on Bloomberg.
Key investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories. Insight with Haslinda Onen, only on Bloomberg.
From our studios in New York and San Francisco, our expert hosts have the data and analysis from the companies you know and the startups to watch, plus the interviews you don't want to miss. Watch Caroline Hyde and Ed Ludlow on Bloomberg Technology, the only daily business show dedicated to tech, right in the middle of the trading action. Live every weekday, only on Bloomberg Television. Context changes everything.
up-to-the-minute geopolitical news whenever and wherever it happens. I'm David Gura in Rio de Janeiro, Brazil, and this is Bloomberg.
Welcome back, everyone. Now, Germany's highest stakes election in years is paving the way for a pivot to increase spending, with markets predicting the end of an era for constrained fiscal policy. But now the focus, of course, turns to the formation of a coalition government. And here to discuss all of this with me in Berlin is Chad Thomas, Bloomberg's executive editor for Europe. Chad, we had great fun on TV yesterday, breaking the numbers, trying to understand what was happening next. What are the likely options now for a coalition?
Yeah, the picture's looking a lot clearer now this morning. Last night we were talking about how many parties were going to get into the Bundestag. Now we know that. Now we know that there's really one path to power for Friedrich Merz and the Christian Democrats, and that is a coalition with the Social Democrats. It's kind of funny that to be talking about that, because on the one hand, the Social Democrats, they had their worst results since World War II, but they, in the end, are the only option for the Christian Democrats. So despite doing very poorly in this election, they actually have a lot of power when it comes to the coalition negotiations. Expect them to try and extract everything that they can from Merz, including plum ministry posts like the finance ministry, and also they want more social spending, and so they'll push him on that front, surely, as well. Merz had talked about actually cuts in social spending. Well, that seems quite unlikely if you're going to enter into a government with the Social Democrats.
And Chad, you've also been number crunching. I mean, we now have a much more clearer picture of what regions voted for, and if you look at the East, it's very clear that it tended to vote more for the extreme parties.
Yeah, it really is. If you're a mainstream party, it should be a wake-up call. So the AfD won in all of the 5 states in the former East. They got more than 30% of the vote. Then there are 2 far-left parties that did very well. You put those 3 parties together on the far left, the far right, 55% of the vote in the eastern states. So they have a majority there. So unless these mainstream parties come up with some sort of answer, one would expect that that's going to continue to grow.
I mean, the AfD, far right, above 20%. How much of a policy voice as main opposition party does it give it?
Well, one of the main things that will be a real challenge is if they want to have any reform of the debt brake, the Christian Democrats, the Social Democrats, that seems very unlikely to be able to get through the Bundestag, because that would be a constitutional amendment. Constitutional amendments take a 2/3 majority. The AfD and the Left Party, they are against any potential reform there. And so there isn't a 2/3 majority for the mainstream parties. So they may be able to make some changes in terms of emergency spending, but an actual reform of the debt brake looks unlikely as we look at it this morning.
Yeah, and we're not expecting anything for Easter, which feels like a very long time away. Chad Thomas, thank you so much. Chad and his team, of course, will be working nonstop to bring any update that we may have, our executive editor for Europe. Now, you can continue following all of the news, all of the reaction to the German election on the Bloomberg terminal, and of course on our top live blog. Now, up next, a Bloomberg Brief with Danny Berger in New York. They'll have a full German election countdown. There's also quite a lot going on with Emmanuel Macron going to Washington to speak to President Trump about Ukraine. This is Bloomberg.
about quantum computing? People talk about that. Is that something that I should be looking at investing in?
I've made a lot of mistakes, betting on these new technologies like AR, VR turns out to be not so big, 3D printing turns out to be not so big. My estimate is $100 trillion was invested in today's dollar in the PC, CPU-based infrastructure. All this is going to get ripped out to put $100 trillion or more in our GPU-based infrastructure. In that sort of quantum of numbers, I feel that the quantum computing is going to be very small.
You always are worried about, I presume, geopolitical events. So are there some geopolitical events you're worried about right now?
Yes. I don't know why, but for some reason, I love thinking about black swans. And at the office, everybody thinks I'm weird because I'm always thinking about what can go wrong. But underpinning the AI is the chips. And the chips, despite the CHIP Act, which I think was a good idea for the US, I still think like 80% or so of the capex of TSM is in Taiwan. And so at the leading edge, a lot of capacity is in one very small area. Forget that it's just in China, it's in a very small area. I think that's very risky.
Bloomberg Invest is back. Join me, Sonali Basak, and the industry's most influential people for a comprehensive view across financial markets. Hear what a second Donald Trump presidency means for the economy, how AI is being monetized by investors, and the next big risks facing the private credit industry. Bloomberg Invest, March 4th and 5th in New York City. Register your interest to attend at bloomberglive.com/invest.
Middle East and Africa. Vibrant resources and high-yield investment opportunities abound. Join me on Horizons Middle East and Africa for the stories, newsmakers, and insight from this exciting region. Now weekdays, only on Bloomberg.
It's a multi-trillion-dollar industry. We'll show you what's happening in ETFs like no one else. ETF IQ, only on Bloomberg.
Good morning from our global headquarters in New York. I'm Danny Berger. Manish Krani is off this week, a well-deserved break. Welcome to Bloomberg Brief. Let's set your agenda. The biggest fall of the year, stocks attempt to come back after a session marred by worsening inflation expectations. A grand coalition, German conservative leader Friedrich Merz clinches an election victory. The euro and DAX strengthen. And the biggest salvo against China. The Trump administration takes its most sweeping actions to curb China investment yet in America. Well, the S&P 500 on Friday declines just under 2% to clock its worst day so far of the year. And we are already on our way back up. S&P 500 futures higher by more than 0.5%, about exactly 0.5% for the NASDAQ 100. It was inflationary data that also really brought down the Russell 2000. It was UMich. Consumer sentiment was worse, but inflation expectations were higher. Flash PMIs also slumped into contractionary territory for the first time since 2022. Add all that together for your bond market, and it was yields lower on Friday. Today, it is yields higher. 4.2%, at least on the front end. We are basically flat on your 10-year yield, 4.4%. And some of the euro strength comes off the boil. It did touch a one-month high versus the dollar. The center-right and center-left in Germany have enough seats for a grand coalition, but fall short of the two-thirds majority. We also have some individual stocks we are keeping our eye on this morning. Alibaba is one of them. It's pledged $53 billion on AI infrastructure over the next 3 years. Shares down, though, in the pre-market session for its ADR, 2.8%. The investment is one of China's biggest AI infrastructure budgets. Elsewhere in AI, NVIDIA, it is rising. That's mostly likely in reaction to the 4% drop on Friday. The rebound, though, happening even though Microsoft has reportedly canceled leases for a substantial amount of data center capacity in the U.S. Coinbase, that's also gaining in the pre-market session. That is up 2%. U.S. regulators poised to dismiss a legal case against Coinbase. Some of the gains, though, at one point they looked like 6% in the Friday session. They were paired after a crypto exchange, Bybit, disclosed that it had been hacked. And in just a few minutes, we're going to be catching up with George Saravelis of Deutsche Bank. Later in the hour, we will be chatting with Stephanie Guild of Robinhood. Back to one of our top stories this morning. The German CDU party won the most votes in the country's election yesterday. Friedrich Merz set to become chancellor. Merz has signaled that Germany and Europe need to be independent from Trump's America. First, though, his party needs to form a coalition government. Joining us live from Berlin is Bloomberg's Oliver Crook, who has been leading our coverage on this story. Ollie, what's next?
Yeah, so listen, Danny, it was a sort of resounding victory from Friedrich Merz, though a little bit shy of what had been anticipated in the polls, winning about 28% of the vote after really sort of the last 4 months polling at about 30%. I was at their headquarters last night, and I have to say that despite the fact that it was a victory and that all the sort of politicians that I spoke to last night really wanted to sort of promote it as such, there was a little bit of an air of disappointment in the air, because at the end of the day, the reality of the situation is the really sort of big winner last night was the AfD, the Alternative for Deutschland, more than 20% of the vote, almost 21% of the vote. The first time a far-right party has done so well since the end of the Second War here in Germany. And what now ensues, Danny, is this question about coalition discussions. We got the final numbers, or the semifinal numbers last night, which looks like now, as a consequence of how the sort of parliament is composed, that Friedrich Merz, the CDU, will be able to build a grand coalition with only one party. Remember, Danny, the fear was, for many market participants, was that this is going to be another ugly sort of negotiation with three parties that are not really ideologically aligned. This seems like the center left and the center right will be able to form a government. That being said, Danny, he says he wants to move really fast and that the world is not waiting for Germany. In German terms, moving really fast means getting a government basically before Easter, aiming to have it done within 2 months. And when we think about the sort of Trump timeline, Trump has been president for basically 1 month, and how quickly things are moving, to not have a government in Europe's biggest economy for the next 2 months is not really something that I think the continent really wants to deal with, nor Germany.
Oliver, it's something you and I had talked about before the vote. Where will leadership come from Europe? Does this election cement that? There is definitely a shift that seems like it's taking place, and particularly an anti-American one. Merz saying after his victory that he promised to achieve independence from the U.S. What shift is taking place in Germany and in wider Europe, Oliver?
Yeah, so listen, I don't know that it's a sort of defiance or anti-America. I mean, I think the Germans and the Europeans would very much like to continue to rely on American support. I think they're just taking a more and more sober look at the reality of who's sitting in the White House and what that will actually mean for them. Remember, I mean, Germany is now staring down the barrel of 25% tariffs for the auto industry, potentially coming in the beginning of April. That will basically guarantee a third year of contraction. And of course, the Trump theme is unavoidable across every capital in Europe. And I caught up with one of the senior CDU lawmakers last night at the event headquarters, Jens Spahn, who was the former health minister under Merkel. You'll remember him doing the daily briefings about kind of what the priorities are going to be and what he imagines the relationship with Donald Trump will be. Have a listen.
I'm very sure Friedrich Merz and Donald Trump will get along very well. Olaf Scholz, our current chancellor, was just seen as a lame duck in DC. No one really took him serious, and that's going to change. They will get along well personally, and that's then a good base to make deals these days, is it called, to negotiate and to find solutions regarding China, for example, that we do more transatlantic trade perhaps and both less with China, common approach towards China, that we do invest more in our security. I'm very sure we can find common grounds.
So some optimism from the CDU there, you heard from their headquarters. I mean, Trump, for his part, went out on Truth Social last night saying basically, you know, calling this sort of a big victory for the conservative movement globally, that the conservatives won in Germany, saying that, you know, didn't go out so as far as to say sort of congratulations to Friedrich Merz, but did say congratulations to the German people. But Friedrich Merz, let's not forget, though this is a party that has tacked to the right on immigration, he is very much a Europeanist. He was a former member of European Parliament, and he's acutely aware of the fact that Europe needs to be able to get its own seat at the table without begging.
Oliver, thank you so much for your excellent coverage throughout last week, the weekend, and today. Oliver Crook in Berlin. And you can keep up with the latest coverage on the German election by typing TLIV GO on your terminal. Joining us now is George Saravelis, Global Head of FX Research at Deutsche Bank. George, really wonderful to speak with you. And I know you just put out, and the team, an excellent note on euro versus the dollar. Some strength is being capped that we saw after the election victory. Does this change the equation for you at all when it comes to the trajectory of the euro?
Good morning. Good to see you. So from our perspective, we've called this election outcome a mixed result. On the one hand, you've removed some of the downside by not requiring a three-party, very messy coalition. But critically, I think from a macro perspective, you really don't have a lot more visibility on a fiscal regime shift. And this is what the market was is very much focused on in terms of affecting bond markets, affecting currency markets, and the lack of a two-thirds majority, I think, reduces the probability that you get any sort of imminent clarity over the next few months on a big fiscal shift. I think there is a possibility that we do get more fiscal easing, but the overall order of magnitude is arguably a lot more constrained than what we could have gotten. And that, I think, is why the market is so constrained in its reaction post the outcome.
As you say, George, the bigger side of the equation is on where I am or where we are, this side of the Atlantic in the U.S. There seems to be kind of this out of nowhere, this sentiment piping up that Trump has been unconventional in some of his tariff policies and things that he's doing with Doge. So why should the dollar be spared? Why should we assume there won't be any sort of radical policy when it comes to currency? Is it reasonable to expect something like that, George? Something that is an explicitly weak dollar policy?
So I think the direction of travel in terms of messaging has been very different from the first Trump administration. On the one hand, you have the US Treasury Secretary explicitly endorsing a strong dollar policy, which is quite different from what happened during the first administration. And I think one reason is they acknowledge that a strong dollar helps keep inflation constrained. What I would say on the flip side of that is there was this perceived so-called S&P put by the Trump administration during the first election. What has now materialized is what I would call a Trump put on the U.S. Treasury market. There's very explicit signaling that they don't want high yields, which effectively is a message that fiscal policy is not going to go out of control. The way we understand the dollar, more fiscal easing, high Fed rates, stronger dollar. I think to the extent that the degree of fiscal easing is being pared back, that is constraining so how much the dollar can rally. But on the flip side, we see the dollar is still being the world's highest yielding currency. We see the ECB still easing, and the European defense discussion is effectively one of buying US goods, buying US defense goods. So we see that as not really allowing for much more euro upside. So the overall forecast we have is for the euro to stay weak.
Georgia, I just want to hang on that point for a moment, because there are still some people in this market who believe it is a President Trump that has something of an equity put, that stocks have been really sanguine in the face of everything that's been going on. But do you believe this, that the mechanism for controlling Trump and really containing any sort of fiscal spending is going to be this Treasury market?
I think we should take them at their word. There's been very explicit messaging on this front, both from the NEC chair, from Treasury Secretary Bessent, and even from President Trump himself. The key market variable from that perspective now is US 10-year yield rather than the S&P. Now, of course, that doesn't mean they control the market, but what it does mean is in terms of policy focus, it's going to be policies that prevent any sort of aggressive sell-off, which we translate as meaning it's unlikely you get aggressive fiscal stimulus. That's not to say we get tightening, but I think if you look at, for example, the endorsement President Trump gave to the Republican House plan around fiscal, which does contain some measures of reduced spending, that it seems to me to be the key focus. I would make a last point on tariffs. Tariffs, from our perspective, are a revenue-raising tool. It's effectively a form of fiscal tightening. And therefore, I think it's entirely consistent for the administration to be talking up tariffs, and I think that is something that will likely materialize over the next few weeks as a fiscal tightening measure effectively, but that is also something that would work in a dollar-positive direction.
Well, there are definitely these dates for tariffs that we have to grapple with. April 2nd, the auto chip and pharma tariffs due. Early April, reciprocal tariffs. The delay to Canada and Mexico tariffs, that is presumably runs out on March 4th. March 12th, steel and aluminum tariffs are due. George, is this a market that's prepared in pricing those days in? Is there real event risk that we've grappled with yet?
I would say the market is not treating these days as a specific event risk. what you've seen since the start of the year is the market has been reducing some of these event probabilities around these specific dates because of the huge back and forth in terms of some of the announcements. But what I do think the whole tariff discussion does is it prevents, it maintains uncertainty, and it prevents to a certain degree some of this return to a greater optimism if you're looking at the European PMIs and the broader growth outlook. So effectively, it acts as a weight to the market, and unless you get resolution that is pointing towards very limited tariffs, I think it's unlikely that this issue will be resolved.
George, really great to catch up with you this morning. You're excellent, as always, on all of this. George Saravalos of Deutsche Bank. Now let's get you some other top stories that are trending on the terminal this morning. This weekend, President Zelensky spoke at a news conference in Kyiv, saying that he would be ready to step down if peace was guaranteed.
Sostanio, to achieve peace, if you really need me to give up my post, I'm ready. I can trade it for NATO membership if there are such conditions. I am focused on Ukraine's security today, not in 20 years. I am not going to be in power for decades.
Microsoft, meanwhile, has begun canceling leases for a substantial amount of data center capacity in the U.S. TD Cowen says that it might reflect concerns about whether it's building more AI computing than it needs in the long term. Microsoft declined to comment on that TD Cowen note. Berkshire Hathaway, its operating earnings surged 71% in the fourth quarter, thanks to higher interest rates and improvements in its insurance business. Its insurance investment income jumped 48%. Meanwhile, its pre-tax underwriting earnings also quadrupled to $3.4 billion. Coming up, Trump takes aim at China with more investment curbs. All of that to come on your brief.
Jumpstart your trading day on Bloomberg Open Interest.
2 hours of single stock stories that are driving the opening bell action.
We'll take you to Wall Street, Main Street, the C-suite, and beyond.
These are companies that are growing their market.
The great companies in the U.S. are the companies hitting the cutting edge. That's a different story.
Get the inside track on what's buzzing in markets
With the players who are shaping the narrative.
If you have bad earnings reports, you're going to get punished.
They're not buying what the industry is selling. Join us on Bloomberg Open Interest every trading day, only on Bloomberg.
There is this real momentum from Wall Street. We are basically deep in the European earnings season.
Take a look at how we're faring when it comes to Asian markets.
Bringing you up-to-the-minute geopolitical news whenever and wherever it happens. I'm Stephen Engel at the Forbidden City in Beijing, and this is Bloomberg.
Welcome to the world of decentralized finance.
Massive outperformance from Bitcoin.
Bloomberg is covering all things crypto, the people.
The tectonic shift emanating from Washington.
All we're looking for is clear rules and the ability to build in the United States.
Crypto shouldn't be partisan.
The transactions.
Really a record-breaking moment.
Crypto VC is back.
And the technology.
It's really the beginning of a global on-chain economy.
And if America doesn't embrace it, we're going to be left behind.
Bloomberg Crypto, only on Bloomberg.
It's your Bloomberg Brief. I'm Danny Berger in New York. U.S.-China ties are getting a closer look and getting tenser. The Trump administration took aim at China with a series of moves involving investment, trade, and other issues, all of this arising in a memo. Joining us for more is Bloomberg's Josh Galou. Josh, what do we understand that's in this memo and the implications of it?
The biggest implication is the sign that Trump is starting to use the committee on foreign investment in the U.S. It's sort of interagency committee that looks at foreign investments, whether they violate any kind of national security risk for the U.S. He's going to use that as a tool to clamp down on China. This, of course, comes in the context of the broader trade discussions and threats of tariffs, but it's more of a signal right now that Trump's ready to use that as a tool. It's a very powerful tool, and it can basically designate critical infrastructure, energy, technology, agriculture, all these things that one could define under the sort of umbrella of national security. It allows this committee, vis-a-vis the president, to essentially cut off all investment. So it's a very powerful tool, and it certainly it's not much of a negotiating point, right? Like unlike tariffs and reciprocal tariffs, this is really a body that can just designate investments to be unlawful.
Josh, that feels really important, that point, that this is not a negotiating tool, something that people assumed was Trump's whole memo or Trump's whole idea in negotiating with China, that maybe they would establish something that allows China to come into the U.S., invest in the U.S., and therefore you avoid the trade tensions. Does this signal a shift of some sort then?
It certainly could, and to the extent it signals a shift, it's pointing to a much more aggressive posture on Trump's part than the sort of stated notion that he wants to balance the trade, that he wants the trade balance to become more equal. So by doing this, he's really pulling a lever that isn't, it's not about a negotiation. It's not about a tariff rate or reciprocity. It's about, it's a unilateral move that he holds there like a stick that is certainly going to be unwelcome in those discussions. Of course, others can do that too, but this one is a very heavy-handed one.
What about the other side of the equation, the China side of the equation, Josh? Because we have seen action from them on things specifically like targeting U.S. tech. Has there been any response? Probably not. I understand that this is just a memo at this point, but what has there been on the other side?
There hasn't been a policy response, as you rightly point out, but Beijing has certainly answered with displeasure that this might be considered, because they, of course, have many Chinese companies not only are investing in the U.S. but also raising money in the U.S. And the exposure is great. So this is sort of paired with other threats about changing a 1984 tax law that's about avoiding double taxation. There's also accounting rules, for instance. That's been a topic for more than a decade with Chinese companies that want to list in the U.S. or raise capital in the U.S., where the standards or the availability of data for companies listed in China or Hong Kong is limited. So these are all tools that Trump is starting to pull out and, essentially dig up things that had been put to rest over the past decade or so, but bringing them back into question as a sign of how hard he's willing to go to the table here.
Josh, we appreciate it. Thank you for that update. That is Bloomberg's Josh Gallo. Some quick lines coming for you. Putin and Xi, according to state media, have held a call. This is the first time that they are speaking, the two leaders from China and Russia, since January 2021. Originally, the call was scheduled to be speaking about the U.S.-Russia negotiations over Ukraine, but here's the readout we have gotten from state media, that Xi says that China-Russia ties have been a strong driving force, that they have unique strategic value, and that the ties are not affected by any third parties. Again, that's the readout from the Chinese state media of one of strong ties between China and Russia. We will bring you any more lines from that phone call as they come up. Coming up on this show first, agencies push back on Doge. We'll have more of that and some of your front page news on your Bloomberg Brief.
I've seen firsthand how some fashion businesses make women feel. And I think there's one thing, you know, being really vocal and being an Instagram activist and talking about something, there's a difference than putting your money where your mouth is and really trying to do something about the problem. And that's what I did with that business. It was about how do I take everything that I know and I've learned and actually do the opposite. And I think that as a young black female entrepreneur, the only thing that I could do was what I know from my experience. And the honest truth is, I didn't set out to create a company that was like deeply rooted in the principles of inclusivity and diversity. I set out to make a company that was right for me and my friends, and I knew that if I had a problem, chances are somebody else does. And I think that's where so many businesses are, you know, created, when you're solving a problem that's real for you and therefore real for the consumer.
US tech is influencing global markets.
Technology is driving business across Europe.
Companies in Asia are betting on tech.
From our studios in New York and San Francisco, our expert hosts have the data and analysis from the companies you know and the startups to watch, plus the interviews you don't want to miss. Watch Caroline Hyde and Ed Ludlow on Bloomberg Technology, the only daily business show dedicated to tech, right in the middle of the trading action. Live every weekday, only on Bloomberg Television. Context changes everything.
You're watching Bloomberg Brief. I'm Danny Berger in New York. Let's take a look at the front pages this morning and what's making news around the world. Bloomberg has this. President Macron and UK Prime Minister Starmer are heading to Washington to meet President Trump. There they will discuss the European role in U.S.-Russia talks on ending the war in Ukraine. Objectives of the meeting include securing U.S. security guarantees for Ukraine, demonstrating Europe's commitment to increase defense spending. Next up, the Wall Street Journal leads with federal agencies pushing back on the Doge team's email to justify jobs or face being fired. Emails sent to federal employees instructed them to provide by late Monday 5 bullet points describing what they accomplished last week. Musk's efforts mirrored a similar pressure campaign on Twitter employees when he purchased it back in 2022. Finally, the FT reporting on Shein's profit slump by almost 40% last year. It puts more pressure on a potential IPO in the UK. The retailer did not respond to a request for comment from the FT. Let's get a check on your euro quickly this morning. Some of the gains starting to peter out. We're stronger by just about 0.1%. George Sarovelos saying that really the positivity for the euro coming more from the U.S. side of the equation. That is, Trump's put is not about the equity market. It is about the Treasury market, and Treasury Secretary Scott Bessent has made that clear, saying that some of the efforts, the Doge efforts, and some of the fiscal easing might not be as strong when you look at Trump's endorsement of the House package. So 104 is where we stand on the euro this morning. Coming up, Robinhood's Stephanie Guild says expectations are everything as UMich hits its highest level since 1995 for inflation expectations. Stephanie joins us next.
What legacy I would love to leave is to make sure that in my village I have infrastructure. So long when I'm gone, things are still working. then I have done my job. And if some people get inspired through my work and then try to engage themselves for their community and create something that is inspiring for everyone, I will be happy.
What's the best piece of advice you would give to someone young who wants to make a difference actually in this world? In architecture or with something else?
Wow. I'm not the right one to just do that.
I think you are.
Yeah, but with the pressure you have, and then you try to be the good one, the fancy guy, the intellectual one, I have no advice than to believe in yourself and really work hard. You know, when I started, no one would have imagined that I will be able to see my name connected with Aga Khan or Pritzker or sitting at Bloomberg to talk about sustainability, about future of sales. No. Myself, 5 years ago, if you told me that, I will say no. I will never imagine. So I will encourage everyone to believe in what you're doing and not try to run after the newest of the newest. Just be consistent. Just work on things that matters for you. Really, at the long term, it pays.
Good morning. This is Bloomberg Surveillance.
Welcome back to the opening trade.
This is Bloomberg Technology.
This is the Asia Trade.
This is Wall Street Week. Welcome to Balance of Power.
This is Bloomberg Television.
Bringing you up-to-the-minute geopolitical news whenever and wherever it happens. I'm David Gura in Rio de Janeiro, Brazil, and this is Bloomberg.
From our global headquarters in New York City, welcome to Bloomberg Brief. I'm Danny Berger. Let's set your agenda. The biggest fall of the year, stocks attempt to come back after a session marked by worsening inflation expectations. President Macron and Prime Minister Starmer head to Washington for Ukraine talks. Meanwhile, President Zelensky says that he's ready to step down if it means peace. And in AI divergence, Microsoft ditches its AI data centers. Alibaba plans to invest more than $50 billion. Friday, the worst session for U.S. stocks so far of the year, but we weren't even down 2%, even though we attempt to make a comeback this morning. S&P 500 futures up 0.5%. Russell 2000, those outperformed, but they did have the worst of it on Friday. After UMich inflation expectations were worse, flash PMIs, those were also negative. A stagflationary feel, shall we say, to the data. That worst data also meant that treasuries were bid. We saw 6 consecutive weeks of treasury yields declining. That is the longest streak since the summer of 2019. We fight against that this morning, at least on the front end of the curve, 1.5 basis points higher. Your 10-year yield basically flat this morning, 4.4%. The euro is strengthening, but it's taken off some of its shine, the initial shine coming from a victory from the center-left and center-right parties, able to form a grand coalition, but don't have a 2/3 majority. Now, again, let me just rehash that data that we got on Friday. It was flash PMIs that were weaker than expected. You also had a UMich sentiment survey that showed inflation expectations unusually high and consumer sentiment unusually low. That led to a sell-off in markets. Joining us now is Stephanie Guild, Head of Investment Strategy at Robinhood. Stephanie, really great to see you this morning.
Thank you.
The market, it has been really sanguine, finally getting a spook on Friday. How much do you read into the data and the ability of that to maybe notch stocks lower from here?
I mean, I was looking back in history, and it's pretty normal to have like about 5% of the data over the last 10 years, or daily data, can see a pullback of 1.7% or worse in the S&P. About 75% of the time, it leads to a continued pullback at the very least, if not a correction. 25% of the time, it doesn't. So it can happen, right? Like stocks do go down, and they go down often. I think we just have been in this trading range, and if the market hadn't seen, let's say, maybe softer information from Walmart and some other places, I think maybe it would have been able to take it in stride. But you also have a lot of uncertainty.
Yes.
From the government, particularly.
Do you think that there has been a vibe shift with Walmart, with some of the recent data, or is it a market that is stuck in a range because of that uncertainty?
I do think it's a little bit of a vibe shift. The reason for that, and maybe this is just random data, but a lot of the times when we see a market pullback, our customer base buys the dip. And you saw that after DeepSeek, for example. But when the tariffs first started coming in, we actually saw a mix of activity, buying and selling. And I thought, this is, to me, starting to show a shift of like maybe this part of the market is over and we just need to consolidate a bit. When valuations are high and expectations are high, like does get harder and harder to beat those things.
Well, I know you wrote in your note that you've been thinking about your target of 6,500. What would cause you to lower that?
I'm already thinking about it. In that, I think if we start to get, like, we have to see how the play out of government employment hits the numbers. I always thought if we had, like, let's say we got close to a 4.5% unemployment rate here in the US, that would start to make me think we were heading for at least a soft recession. You do have rates coming down. I think we have to see how sentiment starts to impact the consumer as well. And I think that's what, like, the Michigan survey on Friday spooked investors as well. So I think that's where I'm thinking, like, I just don't know how much, like, when I got to my 6,500 target, it was the most I could go. And I was watching other analysts on the street go to 7,000, right? And I'm like, I don't even know how you get there right now. So that's why I started thinking, like, maybe 6,300 is the right number for this year.
I mean, it's such a good point, because at the end of last year, not only did you have all the 7,000 or even higher than that targets come out, everyone was so enthusiastic about the animal spirits. And here we are, the second month of 2025, things like M&A haven't lived up to expectations. Things like regulatory easing, we haven't got that yet. We haven't gotten tax cuts yet. It's all been about tariffs. Are the animal spirits gone, I guess is the question. Are they gone? Are they still in waiting? Is the order from the administration means that we're not going to get that boost that everybody expected at the end of last year?
I think we got the boost post-election, and now, like, because it pulled that forward, now it's like, okay, now we have to deal with the tough stuff. Because the agenda was never 100% positive. But yes, I think they're in waiting. If we do start to get some of the other things, it will be helpful. But right now, you have the budget, you have debt ceiling, you have a possible shutdown, you have just some things that, like, perhaps the government seems to be focusing on that aren't as important to the economy. And that's sort of like, why are we getting distracted by those things? It's still all about the economy.
Well, you see it in the trading, right? In Friday's session, it was a real defensive feel to it. Not just the overall drop, but it was defensive stocks that did well. Right. Mag 7 is also down year to date so far. Is there a leadership shift happening in that way?
For sure. I mean, I've thought we were going to have more breadth this year, and we've gotten it, although in a pullback, like, you tend to not see breadth because everything goes down, except for defensive stocks. But I thought it was interesting that we've seen the 10-year coming down a bit, and maybe that continues to happen if you do get a softening in the consumer, if you do get a softening in employment, then that should be a help, at least from a valuation perspective on some of the growth names. But I just think you've got, like, this is a stock picker's market, and focusing on just the S&P is probably not going to give you the best returns.
We did have news over the weekend that Microsoft maybe is spending less on AI, that they're pulling back some of their leases for the data centers. How about the hyperscalers and their ability to continue spending? We got that first kind of spook from DeepSeek. It seems to have sort of be happening again. Do you think just the Mag 7, regardless of sort of the rotation that's going on, that some of their staying power and their CapEx power is diminished now?
Yeah, I think it depends on who they are. Like, I still think we're in this environment where it's not just like buy the Mag 7 or buy the S&P. It's what is each Mag 7 company doing? And like Meta, right? Like, that has been the one that has been doing better, although I guess last week it was down. But, because they are a consumer of AI, right? And so maybe their spending doesn't need to be as much. But then if you're, like you said, the hyperscalers, it's going to hurt you. I mean, you are seeing lots of new AI models come out.
Yeah.
And I'm not sure we need to. I think it just shows, like, when you're first, you get to get all the competition, and after that, like, it knocks on your door.
So what are some of your top picks right now?
I still focus on the mid-cap space because it is, like, small caps I was somewhat bullish on, although less so than mid-caps. But I'm starting to just be nervous about that because some of the things that help them, like deregulation and M&A activity, are, I think, on hold for now. The mid-caps I still think can do well. And so there are a couple of names in the mid-cap space. They are consumer-oriented. But, Gap, for one, I think it just looks pretty cheap and could be a turnaround story. Maple Bear, which is the old Instacart, that's actually been rallying quite a bit. So I'm I'm re-looking at it, but these are all names that I just think have businesses that are unique and can show a turnaround, are not expensive, and just have good leadership.
Stephanie, really great to get your thoughts, as always. Stephanie Guild there of Robinhood, thanks so much for joining us. Coming up, Macron and Starmer head to Washington. We're going to look at what the world leaders will be discussing. That's coming up on your Bloomberg Brief.
Listen carefully. Can you hear the rhythm in the markets? Not just in the syncopations triggered by inflation, but in the preludes leading to global elections, in the dissonance that moves the Nikkei, and the rising course conducted by AI. There's music in the markets, and if you want to learn to listen for it, we'll show you how.
What about artificial intelligence? Is artificial intelligence going to enable you and others to say, we have enough information to know exactly what something is going to be worth in terms of insuring it or not?
Artificial intelligence is finding its way into our business in a variety of different factors. I think the first piece is getting much better insight into data, which allows us to make better decisions on underwriting. It's also a great opportunity to service business better in terms of like call centers and different ways of what's using robotics and other AI will be very helpful. But it is an emerging practice within the industry and one that is evolving very quickly. So it's also going to present risks that other companies, how they use it and how they use large language models and making sure the decision making is very sound. So it's complicated, but it definitely is benefiting the business today.
Morning, this is Bloomberg Daybreak Europe. I'm Tom McKenzie in London. These are the stories that set your agenda.
Taking you from the U.S. market's close to the overnight session in Asia, we'll walk you through what you need to know to kickstart Europe's trading day. Live from our European headquarters, we bring you the day's top market-moving stories, unmatched expert analysis, and on-the-ground reporting from across the continent. Tune in to Daybreak Europe, only on Bloomberg Television. Context changes everything.
So, Steinio, to achieve peace, if you really need me to give up my post, I'm ready. I can trade it for NATO membership if there are such conditions. I am focused on Ukraine's security today, not in 20 years. I am not going to be in power for decades.
Ukraine's President Volodymyr Zelensky speaking at a news conference Kyiv on Sunday. The country marked 3 years since Russia's invasion over the weekend. Joining us is Bloomberg's Bobby Ghosh. Bobby, great to see you this morning. Thank you for joining. So you have Zelensky saying this, perhaps more symbolic than anything, but does it feel like we are making moves of Zelensky being more willing to have the negotiations or to let the U.S. negotiations continue on and get to something that looks like an end to this war?
Well, this business of offering to quit, that's a politician making a very political, sort of dramatic statement. It's not to be taken more seriously. It's a bit of political theater. Whether he's prepared to let the United States and Russia duke this out or negotiate this out without the Ukrainian presence, I don't think he's ever going to openly say that. He's okay with it. He's going to depend, I think, in the absence of, without a direct presence in that room, he's going to depend on the two big visits to Washington this week by Keir Starmer of Britain, but first today by Macron of France. He's going to depend on them to try and persuade Trump that Ukraine ought to be defended, that Trump ought not to hand away the store to the Russians. So he's going to be keeping his fingers tightly crossed and watching very closely. The Polish President Duda saw Trump on Saturday with that basically the same message. So that's basically all Zelensky can do right now, which is put out the word that, look, I'm not a dictator. I'm happy to step away if necessary, but we need American protection, and we need our friends to persuade the Americans to keep that protection at the level that it is now.
Well, Starmer and Macron heading to D.C. bring up this question of European leadership and where it stands, especially after a German election where Merz got the victory he needed, but it takes time then to form a government. Is there that continuity, that cohesion from Europe as these leaders go see Trump in order to convey the message that they need?
Well, there's a message they want to give to Trump, and then there's what Trump wants to hear from them. What they want to tell Trump is, you've got to keep protecting us. What Trump wants to hear is, we need to step up our own protection. And the one thing that these three have, Merz, Starmer, and Macron, is that they're more or less aligned on that argument. Starmer is under pressure from his own defense chiefs to increase Britain's budget. Merz has said that he wants Europe to increase its defense spending, and Macron is talking about increasing France's defense spending as a proportion of the GDP, which is about 2% now, to much closer to the 5% that Trump has been demanding. So on that, at least, that they are in concert. So Trump will be happy to hear that, and that's presumably where they want to open the conversation. If they want to soften up the American president, they start there by saying, look, you're right. We need to increase our spending. This is our plan to increase our spending, but we need you to cover us. It takes a little while to get there. We need you to cover us in the meantime.
I see. Okay, and at the same time, there's this idea of Trump-like deals, and that's where we get to the Ukraine-U.S. Mineral Pact, latest reporting that they're still working out the details. Where do we stand on this and its ability to have the U.S. give Ukraine some sort of security guarantee in exchange?
Well, it's a little reminiscent of one of Trump's real estate deals from years gone by. This figure of $500 billion worth of minerals, and a lot of it being rare earths. Bloomberg News has done sort of a deep dive into this. It's not there. Ukraine just does not have internationally recognized deposits of rare earths to that degree. What Ukraine does have, titanium, lithium, these are not particularly scarce commodities. They are available elsewhere in the world, and extracting them from Ukraine, to get Ukraine to the point where it can extract the quantities that would be required to reach 500 billion would require enormous amounts of investment. So I see that number as a very Trumpian number, as putting that up there to try and show that he's trying to get something for, this is Make America Great Again. This is America first, right? That I'm willing to make a deal as long as the United States gains from it. That's the signal he's sending. How the Ukrainians respond is a little tricky, because after all, it's a democratic country. It's not like the president of the Ukraine can simply stand up and say, yes, I'm willing to give my national minerals up to the United States. What Zelensky needs to do is find a fine line where he can indicate a willingness for greater economic participation by the United States and American companies in Ukraine without, again, giving away the farm.
Bobby, really interesting. So great to have you on. Thanks for joining us so early in the morning. That is Bloomberg's Bobby Ghosh. Let's turn now to specifically the U.S. side of the equation. Sticking with politics, the Trump administration making more big moves on China, rolling out a memorandum to curb Chinese investment in American tech, energy, and strategic sectors. Joining us now for more is Bloomberg Government's Kate Ackley. Kate, great to see you this morning. Look, this feels like it has a different flavor. The expectation was that tariffs on China was a negotiating stance to allow China to come into the U.S. and make investments. This would prevent them from doing that, though. How should we interpret this memo?
Yeah, I mean, this is considered to be, we're a month into the Trump administration 2.0, and this is really his biggest moves yet, the president's biggest moves yet on targeting China and Chinese investment in the United States. And you mentioned those key sectors, tech and energy. Energy, of course, being a big backer overall of President Trump's agenda. So we'll see. I didn't get in my inbox last night, like I did some of the first round of tariffs, with the business community really mounting a backlash. So I think we're going to see what we've learned in the 30 plus days of the Trump administration is that things can change very quickly. So I think there's a little bit of a reservation in the business community to come out really guns blazing on this. They're going to suss through the details and see, is this what it says it is?
It brings up this question, though. What are tariffs? What are trade restrictions? What are they for? Are they security? Are they revenue raisers? Is it to reorder global trade? Kate, do we have an answer to that at all at this point in Trump's presidency?
Well, you remember at first, the first wave of new tariffs that were announced targeting not just China, but also the United States' biggest trading partner, Canada, and also Mexico. It was a lot about fentanyl and curbing fentanyl at the border and targeting China because, the administration was saying that's where a lot of this fentanyl that was coming into the United States was being manufactured. So that was certainly a key messaging point, not an economic message, but sort of a saving lives type message that, some of the signals from people in the administration was that you can't, oppose this because it's not about an economic message, it's about saving American lives. This obviously has huge economic implications, but again, I think what people in the business community have learned, their lobbying representatives here in Washington, who I cover, are trying to figure out how much is going to be backed up by these big, big picture messages. What is the sort of action behind this, and how will that actually play out?
Kate, meanwhile in D.C., you have Doge and Elon Musk telling federal employees, email us what you do for work, justify your job, or you will be fired. There seems to be pushback, or maybe not even pushback, just departments like Defense, NASA saying, okay, maybe don't do this quite yet. What do we understand about the ramifications of this email and how the directive is being interpreted?
Well, our big headlines today on Bloomberg Government, Bloomberg Law is just chaos, that this is sowing chaos in the federal agencies. You mentioned Defense Department, other agencies, the State Department. Officials have told their employees, hey, hold on a second. We're not sure if you should comply with this. Don't comply yet. The original email did say, don't put anything in that's national security or top secret information. But some of those agencies, state, defense, et cetera, have told their people to hold off. And this is coming amid a big wave of seeming to be firings and reductions in force at USAID, which works very closely with the State Department abroad and at home. So a lot of chaos across the federal agencies today that will reverberate on Capitol Hill this week.
We'll see how it plays out. Kate, thank you so much. Kate Ackley of Bloomberg Government. Turning to tech now. Microsoft and Alibaba are having dividing fortunes when it comes to AI. Microsoft canceling leases on AI data centers, according to a report by TD Cowen. Alibaba, meanwhile, has vowed to invest $53 billion in AI infrastructures. For more, joining us now is Sankalp Fartial, Bloomberg's Sankalp Fartial. Sankalp, thank you so much for joining us. Let's start with Microsoft. What seems to be behind their move to pull back on some of these data infrastructure leases?
TD Cowen actually says that this could be a case of building of overcapacity. Microsoft may have already exceeded the capacity it needs, or it might have overestimated the capacity it needs for AI. So therefore, this pullback. But I mean, TD Cowen analysts are saying that this is their assessment. They've hedged it by saying this is their assessment and they need to get more color on it.
And then we have Alibaba that's investing more. And Sankalp, all you need to do is look at this equity market of what's been happening. A big rally in Chinese tech and Mag 7 that are down year to date. Does it suggest a differing fortune, a diverging fortune between the sectors of the two different countries?
I mean, Alibaba has been in the cold for a couple of years now, so it is really trying to say that this is their big bet on AI. This is the biggest amount of money, $53 billion, that they've spent in a decade, and they want to be at the forefront of AI technology and developing AI infrastructure and cloud infrastructure. I mean, we see that example in Apple actually partnering with Alibaba in China to, give a layer of security and to comply with local regulations as far as Apple Intelligence is concerned in China. So this is really Alibaba's big push into AI, and they want to be at par with US companies.
We'll see how investors decide that if they like that. Those shares down 3.2% for the ADR in the pre-market. Sandkalp, thank you so much for joining us. That's Bloomberg Sandkalp for TL. Coming up, NVIDIA earnings, PCE, it's a big week, all of it to come on your Bloomberg Brief. We'll lay out the trading diary for you.
From the beating heart of global finance, economics, and politics, and wherever newsmakers are moving markets, Bloomberg brings you conversations that allow for deep discussions and important insights. What do you think the future is for inflation? Is this a new normal? Are markets too optimistic? How do you worry about the things that are outside your control? How does the current fighting completely stop? I'm Francine Lacqua, and this is The Pulse, every weekday only on Bloomberg.
U.S. jobs numbers are released. Bloomberg has the report under surveillance with crucial data and expert analysis at terminal speed. Nobody covers Jobs Day like Bloomberg. Bloomberg brings you breaking news 24 hours a day. Powered by 2,900 journalists and analysts in more than 150 offices across the globe. Bloomberg Television. Context changes everything.
Jumpstart your trading day on Bloomberg Open Interest.
2 hours of single stock stories that are driving the opening bell action. We'll take you to Wall Street, Main Street, the C-suite, and beyond.
These are companies that are growing their market.
The great companies in the U.S. are the companies hitting the cutting edge. That's a different story.
Get the inside track on what's buzzing in markets.
With the players who are shaping the narrative.
If you have bad earnings reports, you're going to get punished.
They're not buying what the industry is selling. Join us on Bloomberg Open Interest. Every trading day, only on Bloomberg.
Bringing you up-to-the-minute tech news whenever and wherever it happens. I'm Ed Ludlow in Las Vegas, and this is Bloomberg.
It's your Bloomberg Brief. I'm Danny Berger in New York. Let's get you set up for your trading week. It's a busy one. President Trump and President Macron will meet at the White House today. Then we'll have what maybe is the big event of the week, NVIDIA earnings. Those come out on Wednesday. Then we will be rounding out the week with PCE, personal income and spending data. That comes on Friday. Some stocks to keep your eye on that are moving in the pre-market. Berkshire Hathaway earnings over the weekend, those shares up 1.5%. Operating earnings surged 71% in the fourth quarter. Insurance was strong. Higher rates also helping them, or at least the maintenance of higher rates. Nike, that is also gaining for 2.4%. Jefferies upgrading it to a buy. Analysts citing a strong recovery over the next 2 years, saying that the CEO has, quote, the right playbook. Lam Research, that was also upgraded to positive at Susquehanna. That sell-side action bringing those shares higher by about 1 1/3%. The analysts there saying that the chip maker's expansion beyond its memory division is one of strength. All right, as we head to the end of the hour, just a quick look at what the euro is doing. It is back up to 0.2%, strengthening after we seem like we will be getting a grand coalition led by Frederick Merz. Okay, that is it for your brief surveillance. We'll take things from here.
also an owner, I should have pointed out, of 3 major sports teams.
That's right.
Right? And you're the first woman, as I understand it, the first woman to own 3 major, have stake in 3 major sports teams. Is that right?
Yes, and we'll say African American.
You were approached by the owner then of the, I guess, the Washington Wizards and the Washington Caps about maybe buying the Washington Mystics, which is the women's basketball team. And what did you say?
Well, first of all, it was Abe Pollin. He did come to me and Susan O'Malley, and they said, Abe Pollin says, look, I want you to be the face of the Washington Mystics. And I said, what do you mean be the face of? He says, I want you to buy this team. His health was failing. And I have to tell you, and a lot of women can understand this, we never get these opportunities. So that was the first thing that struck me, and I was flattered. I was really flattered. I said, well, Abe, what are the financials on this? And he handed them to me. He says, well, they're not making money. But I was still intrigued about team ownership.
Key investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories. Insight with Haslinda Anand, only on Bloomberg.
From an index standpoint, you may not see as much excitement this year.
Markets have been resilient so far and maybe more than resilient in the second half.
When you look under the hood, there's rotation happening and there's dispersion, and that's what's dampening volatility.
Ultimately, it'll be a good environment for stocks, but it's going to be a little bit more difficult.
Right now, it is about being broadly diversified.
This is Bloomberg Surveillance with Jonathan Farrow, Lisa Abramowitz, and Anne-Marie Hordern.
Let's get your week started live from New York City this morning. Good morning for our audience worldwide. Bloomberg Surveillance starts right now, coming into Monday following the biggest one-day loss on the S&P 500 so far this year. Equity futures bouncing back. Your scores look like this. Up 0.5% on the S&P, on the Nasdaq 100 up by 0.3. That positive growth shock of early November felt like a long time ago in Friday's session. Consumer confidence down. Inflation expectations up. Existing home sales lower, and the worst PMI going back 17 months.
Especially when it has to do with services, not necessarily manufacturing. Suddenly, the engine of this economy seems to sputter, and growth concerns seem to be in the front and center at a time where, if you take a look at the U.S. City Economic Surprise Index, it has reached the lowest level, negative, for the first time going back to September.
This is going to be a bearish start to the program, so forgive us for the next 2 minutes or so. 6 consecutive weeks of lower 10-year bond yields. Is that good or is that bad? That move has been reinforced by weaker than expected outlooks from the likes of Walmart. The week before, weaker than expected retail sales. It's not the mix you want to see to start a new year.
It's definitely not the mix you want to see, especially for an administration that one of the reasons why they won is because they were concerned and were listening to American voters when it comes to inflation. And the Michigan survey on Friday showing these inflation expectations going up is not good news, especially when you have a threat of tariffs coming down the pipeline of this year.
Stevie Cohen, I'm actually pretty negative for the first time in a while. Tariffs cannot be positive. It's a tax. Put his name together with Ken Griffin. They're 2 very big names in this world.
And listen to some of the more bearish prognostication from even Warren Buffett, the man who's talking about American dominance and the incredible gift of being born in the United States. A very different tone over the weekend. At a certain point, they might be saying the quiet part out loud at a time where a lot of people are trying to justify surgical use of tariffs when they're being used in a whole host of different manners and threatened in a blanket type of way. I will just say, some people might say on a surgical level, tariffs are good and they can be used well. Right now, there is not a sense of what the ultimate goal is, and that level of uncertainty is making it very difficult for anyone to plan.
There's a couple of things to watch this week. There's 2. One is earnings and the other's a data point. On the earnings front, NVIDIA in the middle of this week. Later on in the week, the Fed's preferred inflation gauge, core PCE. Do you think we get a clear pass on PCE because we've had PPI, CPI, that ultimately it's not going to be a big surprise?
That's what a lot of people seem to think. We get personal income and spending alongside core PCE. Any incremental change to the upside, you can imagine people will respond much more significantly to. But right now, it doesn't seem like people are worried about longer-term inflation. Right now, people are worried about the growth shock that could come, the growth hit that we can see with some of the data that's coming in less positive from a growth perspective. And so at this point, I'm not sure how even the bond market responds other than higher short end and lower long end.
The Fed seems to be on pause at the moment, and that's critical. For the Chicago Fed President Austin Goolsbee, he was asked about the University of Michigan survey and the fact that consumers do seem to be a bit concerned about inflation. He said this: it wasn't a great number, but it's only 1 month of data. You need at least 2 or 3 months for that to count. I think that's pretty much going to be the Fed throughout the entire first half of the year. Punt. It's only 1 month. We need more.
Apple, with some news already this morning in the first few minutes of this program, planning to invest over $500 billion in the United States over the next 4 years. Let's put some jobs on that. They will add 20,000 US jobs to begin producing Apple intelligence servers in Texas, a nod to the new administration.
And maybe trying to insulate themselves from coming under fire for their large presence in China, where they are increasingly partnering with local companies to try to roll out their artificial intelligence. A real question here about how substantive this is versus the signaling to a president that clearly is looking for transactional wins.
I'm not really surprised about this statement, maybe how quickly it came, because on Friday, President Donald Trump told us all of this. He said he met with Tim Cook and he's going to be investing all this money into the United States. Well, guess what? Here it is. What Tim Cook said in his statement, though, is we're bullish on the future of American innovation and we're proud to build on our long-standing U.S. investment with this. This is what you're going to see from a number of CEOs who are trying to make sure they are blunting the threat of tariffs as well. Does this potentially mean, you have to ask, does Apple get a carve-out maybe somewhere else?
That stock in a pre-market right now down by a little more than 1%. We'll pick up on that story throughout this hour. Coming up through this hour, we'll speak to Bob Dole of Crossmark as stocks look to bounce back from Friday's losses. Ed Mills of Raymond James as Doge meets more resistance in Washington. And Holger Schmieding of Berenberg as Germany's conservative leader, Friedrich Merz, clinches an election win. We begin this hour with stocks pushing higher, looking to bounce back following their worst session so far this year. Bob Dole of Crossmark saying Trump has so far done the opposite of Trump 1.0 and policies potentially threaten risk to asset markets. Bob joins us now for more. Bob, welcome to the program, sir. Bearish start to the conversation this morning. Make it constructive, will you? On Friday, do you think that was the start of a legitimate, justified growth scare in this country, or too much too soon?
No, I agree with you. The potential for a growth scare is sadly for real. You enumerated it. It's retail sales, it's housing starts, it's manufacturing production, the University of Michigan survey. All of these things are saying, in just a second or two, we've had some pretty good growth over the last few years. Maybe we're going to take a little pause here.
Do you agree?
And the only thing you didn't mention, in my view, from investor standpoint is, and valuations. 22, 23 times earnings. They're discounting a world that should be nearly perfect, and it's not. So I suspect we have some risk.
And you say that we have some risk based on the fact that we have high valuations and earnings that aren't keeping pace. How much of this has to do just with where we are in the cycle and how far we've come versus some of the policies that are coming down the pike?
It's a combination of both, sadly. You mentioned the policies. Look, you all have been watching the opinion polls. A lot of people who voted for Trump, believe in his policies, are struggling with the pace and method of implementation. And so the polls for Trump are beginning to drop some. I suspect there's more of that to come.
We were talking about what we heard from Stevie Cohen over the weekend, saying that tariffs cannot be a good thing. Some people, like Jamie Dimon of JP Morgan, have talked about how surgical tariffs can be useful. And you hear a whole host of different business leaders really taking it in stride and saying they can manage through it. Where's the truth here?
Yeah, great question. Depends how they're used. Part of the problem, as you all have been inferring, is it's one thing one day, it's another thing the other day. Friday, a week ago, remember the word reciprocal tariffs came up. I got encouraged because, if you and I are trading with each other, you have a tariff on me, and I don't have a tariff on you. Reciprocal means I'm going to put a tariff on, unless you say, hey, wait a minute, I'll take my tariff off. So reciprocal tariffs have the possibility of actually bringing tariffs globally down. But that word lasted, about a day and a half, and then we move on to other things.
Well, over the weekend, President Trump said that he's still working on reciprocal tariffs, but the list is very long. We have March 4th when it comes to that pause between Canada and Mexico, March 12th when it comes to aluminum and steel. We get the report on April 1st from USTR and Commerce, and April 2nd we're supposed to get auto tariffs. But all of this potentially could be negotiating tool. What happens if this is just perpetuity of uncertainty when it comes to tariffs?
Well, you use the word uncertainty. Markets hate uncertainty. We all know that. And it comes back to it's complicated. It's requiring further study. It gets pushed out in time. And there are all kinds of trial balloons put up. We just need to take a pause, study this, have some conversations, and not just throw all kinds of stuff against the wall to see what will stick and what won't.
This morning, we also get news that Apple will plan to spend $500 billion domestically over the next 4 years, really a nod to President Trump. Do you think his carrot and stick approach is working when it comes to tariffs on one hand, but maybe better taxes and deregulation if you come into the United States?
It's possible. His intentions are good, in my view. The problem is the world, American businesses can't move on a dime like that and go this way today and that way tomorrow. So it's going to take a little bit of time. But in general, I think that's the approach.
That said, all of this sounds really bearish, but as John was saying, we're not going to dominate the whole show all day, maybe, with some bearish prognostications. You have the likes of Michael Wilson from Morgan Stanley talking about how, given all of what you heard, the U.S. is still pretty good. He said it's premature to conclude the rotation away from the U.S. is sustainable. Mislav Mateka over at J.P. Morgan having a similar kind of discussion over the weekend. Do you think that everything that you've laid out in this uncertainty really undermines the idea of American exceptionalism, especially at a time where you have Europe that still hasn't gotten its leadership coalitions fully intact?
I agree with your premise. That is, this doesn't get rid of U.S. exceptionalism. What it does is say there are cycles, and perhaps we're in the part of a slowdown in the cycle with all the things you enumerated at the front of the show, again, accompanied by high valuations. So we probably have a period of sidewise consolidation and maybe some pullbacks. Hard to see the market moving up 10% from here.
Hey, Bob, appreciate it. As always, Bob Dole of Crossmart. Looking into an important week. Some earnings from Home Depot, from NVIDIA, some data called PCE, the Fed's preferred read of inflation. And it hasn't been a great start to things over the last month, that's for sure. That move in bonds, yields lower for 6 consecutive weeks. We asked this question with Chris Ferrone earlier on in the month. We asked him whether that supports cyclicals in equities or whether it's something we should be worried about the cycle. And based on what the stock market is now telling us, Friday's session alone, then maybe you should be worried about the economy.
When you take a look at the actual data, you could see that consumer confidence has been falling, and you can argue about the political bent to the University of Michigan sentiment survey, but that's the reason why tomorrow's consumer sentiment data is going to be very important as well. Does it confirm that? On the flip side, there has been this feeling that we've priced in all the good news, and now we're getting some of the anti-growth or the sort of the brakes to growth policies coming out of the White House without a clear sense of how long it will take for them to get some of the tax cuts and the pro-growth policies through.
This can change. It's only February 24th, just to keep us all up to speed. We're going into what, week 5? Is it week 5?
Yeah.
It's the 5th week,
wow. 5th week
of the Trump administration. It feels like much, much longer than that. Equity futures right now on the S&P up by 0.5%. Some big news out of Apple this morning. Let's give an update on that and stories elsewhere with your Bloomberg Brief. Here's Danny Berger. Hey, Danny.
Hey, John. Starting in Germany, where the conservative leader Friedrich Merz emerged as the winner in Sunday's election. According to the prelim results, Merz's center-right CDU-CSU alliance won almost 29% of the votes. Merz says that he will form a new government in less than 2 months. In D.C., the Trump administration sent emails to more than 2 million federal workers, ordering them to report on what they did last week or be forced to resign. The deadline to reply is just before midnight in Washington. Elon Musk said the directive came from President Trump. However, several agencies, including the FBI, NASA, and the Pentagon, have asked employees to hit pause on acting on the directive. Now, to that breaking news, Apple has said that it will add 20,000 new workers and produce AI servers in the U.S. The company plans to spend $500 billion domestically over the next 4 years. That will include work on a new server manufacturing facility in Houston and a supplier academy in Michigan. That announcement coming just days after Apple CEO Tim Cook met with President Trump in the Oval Office. And that's your brief, John.
Hey, Danny, thanks for that. More from Danny in about 30 minutes. The words of Tim Cook this morning. We're bullish on the future of American innovation. We're proud to build on our long-standing U.S. investments with this $500 billion commitment to our country's future.
With 20,000 new jobs over the next 4 years, it is the biggest U.S. commitment to date. In new reporting just out this morning, key question here, is this the beginning of more? How much is this trying to placate some concerns by Donald Trump?
Equity futures positive this morning by 0.5%. That stock is down by a little more than 1%. Up next on the program, Doge versus DC.
I think that there are many fine public servants, and if you don't move quickly, then the lobbyists get involved, the entrenched interest, and it's impossible to get anything done.
Can we get anything done? We'll ask Ed Mills of Raymond James next on the program. Live from New York City this morning. Good morning.
Middle East and Africa. Vibrant resources and high-yield investment opportunities abound. Join me on Horizons Middle East and Africa for the stories, newsmakers, and insight from this exciting region. Now weekdays, only on Bloomberg.
Welcome to the world of decentralized finance.
Massive outperformance from Bitcoin.
Bloomberg is covering all things crypto, the people,
the tectonic shift emanating from Washington.
All we're looking for is clear rules and the ability to build in the United States.
Crypto shouldn't be partisan.
The transactions.
Really a record-breaking moment.
Crypto VC is back.
And the technology.
It's really the beginning of a global on-chain economy.
And if America doesn't embrace it, we're going to be left behind.
Bloomberg Crypto, only on Bloomberg.
Always on the heartbeat of the tech sector.
Spread across global markets.
The real-time data aspect is going to be important.
We're going to bring you expert analysis on that. Sure.
Don't miss Bloomberg's interview with the
Equity futures positive here, up by 0.5%, bouncing back from the biggest one-day loss of the year so far in Friday's session. That loss driven by much weaker than expected economic data. In the bond market, 6 weeks of lower bond yields on a 10-year maturity this morning, just about unchanged. The 10-year 443.71. Under surveillance this morning, it's Doge versus DC.
I think that there are many fine public servants, and if you don't move quickly, then the lobbyists get involved, the entrenched interest, and it's impossible to get anything done. Anyone who has experienced financial hardship, any kind of the mental duress, I'm sorry for them, but that's also what the average American experiences every day.
So here's the latest this morning. Federal agencies, including the Pentagon and the DOJ, telling workers to ignore demands from Elon Musk's Doge team to justify their jobs after sending mass emails, Musk posting on X, quote, failure to respond will be taken as a resignation. Bloomberg's Tyler Kendall joins us now for more. Tyler, how much confusion was there in D.C. over the weekend? I think we've lost that audio. When we sort out the microphone, we'll turn it up for you. Tyler Kendall there in Washington, D.C., who you could see but could not hear. Certainly some confusion over the weekend regarding Doge. They sent out that email, and I think the email read something like, tell us 5 things you've done over the last week, which maybe works in the world of information technology over on the West Coast. But if you're in particular parts of the U.S. government, you can't actually tell everyone what you've been working on over the past week.
Especially if you work in things that have to do with intelligence and you actually cannot share that to the world. This is classified information, or potentially if you're doing something that legally could be an issue. I will say this is reminiscent of what Elon Musk did with Twitter. Very difficult to do across the federal government, which is why you have a number of people like those at the DOJ, Kash Patel at the FBI, according to the Wall Street Journal, telling employees, sit on this, do not respond. The subject line over the weekend, and believe me, if you want to see the confusion, you can just look into the text messages I received on my phone. Quote, what did you do last week? That's what Trump and Elon Musk want to know.
Well, the other thing, adding to this confusion, is that in the past couple of weeks, the directive from Doge actually said, don't necessarily respond to any of these emails. So it's such a crosswinds of directives at a time where a lot of people are worried that they are going to lose their jobs. Look, to the discussion we were having, it is important to strip away waste. The question is, how do you do it, and whether there is an ultimate goal, and whether you do it with some degree, as you pointed out, of compassion.
Ed Mills of Raymond James joins us now. We can extend this conversation. Ed, welcome to the program, sir. Hopefully we can hear you, because we didn't hear our last guest. So hopefully we can hear you, so. Ed. Ed, there you are. Perfect. Wonderful. Ed, let's talk about the Doge effort over the weekend, sir. That email that went out. What do you think the consequence of all of this will ultimately be?
So, John, I want you to send me an email by midnight tonight, and if you don't respond, I get $1 million. I think that's one of the responses here in D.C. The question I have with this is that if you go into the executive order that establishes Doge, this is not within their charge. And so you are going to have a series of things, and this is a real issue here in D.C., as to who are you actually reporting to. And if you don't report, are there some legal consequences? Certainly everyone who wants to keep their job is looking for guidance of exactly what they are supposed to do with this under the executive order. Doge is supposed to be working on an upgrade to the IT system and support the chief of staff to the president, Susie Wiles. Doge does not set this out in executive order, but we keep on seeing expansion of that. And until we get some of the legal infrastructure around that, I think there's going to be a lot of quote unquote trauma and uncertainty here in DC. If you want to shrink the federal government, you can do that. We've seen that in the past. There are processes in place. Clearly, they want to move fast, as you saw Treasury Secretary Bessent say with your interview. However, it is unclear on if you move fast, is it more effective or not?
Ed, we have several government agencies, people that Trump put in place, people that everyone in a lot of mainstream media were calling serious loyalists, telling their employees to leave those emails on read. At the same time that Trump is tweeting out memes, one of SpongeBob SquarePants saying, this is what I got done last week, quote, cried about Trump, cried about Elon. If you're an employee at one of these agencies and you want to secure your job, what do you do?
You listen to your manager, because ultimately that is going to be what you kind of have to work with. But there is a lot of uncertainty. And, you know, I think that when we look at kind of some of the, we've discussed the national security issues, the, classified issues, it is very kind of appropriate to have the Director of National Intelligence, Tulsi Gabbard, come out and say to the entire intelligence community, do not respond. There's just certain things that you can't. When you hear from Elon Musk through his posts, some of this is, are there government employees who are not on their email, are not responding to things? That's an appropriate thing to get a pulse check for individuals, whether or not they are engaged in their job. There have been individuals who've been told not to do their job. You look at the Consumer Financial Protection Bureau. There's been a number of folks told, stand down, don't work. So if you're in that position, how do you respond? But I'm also really looking, Anne-Marie, at what's going to happen here in D.C. We have a lot of to-dos in Congress this week. We're going to see at the end of the week, are they going to be able to fill out that 5-step thing? Did they pass a budget? Are we moving forward with the tax credits? Are we moving forward with that new defense and immigration spending?
Do you think the House will pass the budget this week?
I'm really skeptical. I think that, we have a situation where one or two members can sink the entire thing. We already have one hard no out there. When we look at this bill, I don't know if there's enough of a crisis or a deadline to get this done just yet. So I wouldn't expect it to kind of go clean on the first start, but almost nothing caps. More attention is going to go to the Senate passed budget. Maybe that provides a quick win for the president on immigration spending, on defense spending, if they need a backup plan, if the House just can't get everyone on the same page just yet.
How much spending that you see being cut from the U.S. government is real versus just sort of theorized about? In other words, how much oxygen have they really saved by making some of these cuts in the federal workforce and announcing cuts to the Defense Department that haven't been approved yet and are sort of discussions at this point?
Yeah, at least at this point, it's very low. A lot of the savings that have been announced are contracts that have actually already been paid. So I want to see more kind of on a go-forward basis how much that is going to kind of take into account. When we look at Congress, we're not quite sure when they are coming up with some of their budget cuts, how much are those paper savings, how much of those are real savings. I do think, though, there is a lot of momentum of making the tax cuts that passed in 2017 permanent. And I don't think they're going to be able to get $5 trillion worth of pay-fors, either through DOGE savings or through some of the savings that Congress chooses. So having this conversation about how aggressive DOGE is being, how aggressive we are going to be on tariff policy is providing political cover and groundwork to actually add to the debt and the deficit over the next 10 years, even when you've had this narrative that there's such a significant reduction in staff and savings of the federal government, Lisa.
Ed, thank you, sir. We're going to leave it there. Ed Mills there of Raymond James joining us on the latest DOGE effort down in Washington, D.C., and a sprinkle of a little bit more. This from Elon Musk this morning, who might be following the conversation, saying the following out on X. Those who ignored President Trump's executive order to return to work have now received a month's warning. Starting this week, those who still fail to return to office will be placed on administrative leave. The latest from Elon Musk this morning.
This is the threat that if you don't get back to the office, you're not going to have a job. Just to let people know, I think about 60% of current employees, federal employees, are already back to the office. There have been others that are part-time in the office and part-time not. A key question about how much resistance this is, and also what kind of grace period if people are not working near their offices.
They've made it a mandate that they want everyone back to the office. Work from home is not going to work under this administration. And you hear that time and time again from the Oval Office, but also the head of those agencies. They want to see their employees, especially if you're dealing with national security concerns, they want to see you using the computers that they have control on inside those government buildings.
They've made that quite clear over the past month, that's for sure. Up next on the programme, Holger Schmieding of Berenberg as Germany's conservative leader, Friedrich Merz, clinches an election win over the weekend. That conversation up next, with the euro at the moment against the US dollar just about unchanged at 104.69. Live from New York City, you're watching Bloomberg TV.
Behind the bright lights and adrenaline of pro sport is an equally exciting world of negotiations and deal making.
That's what we cover each week on our podcast, The Deal.
I love the fact that you have, we say the cojones, I can't say that in Bloomberg.
Maybe moxie?
Yeah, moxie. I'm Alex Rodriguez, former baseball player turned business executive.
And I'm Jason Kelly, a journalist at Bloomberg. Over the next couple months, we'll hear from all-stars like Billie Jean King.
Well, what should I learn? What should I do? I said, learn the business.
Jay Williams.
You're the asset, but how do you become the principal?
Paul Rabel.
We're going to be the league of digital, and that's why you're going to invest.
Adina Friedman.
I definitely am competitive.
David Rubenstein.
People don't come up to me on the street and say, let's talk about this private equity deal you did recently. Nobody does that. They say, let's talk about the team.
And so many more.
You need a clap?
No, anywhere.
Go.
From our studios in New York and San Francisco, our expert hosts have the data and analysis from the companies you know and the startups to watch, plus the interviews you don't want to miss. Watch Caroline Hyde and Ed Ludlow on Bloomberg Technology, the only daily business show dedicated to tech, right in the middle of the trading action. Live every weekday, only on Bloomberg Television. Context changes everything.
If you are just tuning in, welcome to the program. Equity futures on the S&P bouncing back from Friday's losses, up by 0.5%. Bigger bounce on the Russell. That's where the big losses were in Friday's session. We're positive by 0.9% there. Closing out last week on the S&P with the worst day of 2025, sending the S&P 500 to the biggest weekly loss going back to January 10th. Friday delivering a whole host of negative economic data, boosting the bond market's fortunes, yields lower across the board. Let's turn to the bond market. The 10-year maturity yields dropping there for 6 consecutive weeks, the longest weekly streak going back to June 2019. Sent the 2-year yield lower last week as well for a second consecutive week. The 2-year this morning, Lisa, 421.51.
You said it earlier, and I think it's important to repeat it, that yields are falling for the wrong reasons. And that's the reason why you saw on Friday the Russell 2000 underperform and the worst day on the S&P 500 going back to late last year. A real question about the services component of PMI coming in contractionary territory for the first time since the beginning of 2023. The prices paid increasing the most since 2022 in that sub-index. A real question here about how much of a realistic read this is through what's to come in the months ahead.
The dollar story has been a weaker one over the last several weeks. We've had 3 weeks of DXY weakness for the first time since September. Let's check out the euro. Euro dollar bouncing only a little bit following the German election over the weekend, 104.67. I think a lot of people stateside just have one very simple question. Does it mean they can spend more? And based on what we've seen on Sunday, that won't be easy.
They don't have the full mandate, and they do have to get some of the fringe groups on board in order to pass some sort of new amendment that removes the debt brake from the Constitution. A real question here about how they do that without making concessions that potentially are unpalatable for the ruling coalition.
We'll catch up with Ollie Crook a little bit later in about 5 minutes' time, who's on the ground leading our coverage in Berlin, Germany. On our radar this morning, federal agencies are advising employees to ignore emails from Elon Musk's Doge team, demanding they justify their jobs. The Pentagon, DOJ, and the Department of Health and Human Services telling workers to pause on replying to the emails.
So Elon Musk has this subject line, what did you do last week? And he wants these 5 bullet points to explain, basically justify your position and your job in the federal government. Now, if you want to give some credence to what they're doing, potentially then they could look at what everyone else is doing and see maybe where there's overlap in the U.S. government. The issue is a lot of people in the U.S. government, if they respond to this, it could be illegal. Maybe they can also give away some classified information. So the heads of those agencies are saying, stop, this has gone too far. We need to recalibrate. It remains to be seen then what comes next.
All I can say is Senator John Curtis, a Republican from Utah, said over the weekend, and I want to quote his own words because he is a supporter of Donald Trump, these are real people, these are real lives, these are mortgages. It's a false narrative to say we have to cut and you have to be cruel to do it as well. We can do both. There are ways to improve the efficiency of government without being arbitrary and somewhat mean about it.
We talked this a few times, talked about it a few times on this program, talked about it with the Treasury Secretary, you mentioned it earlier. Are we doing this with dignity for these workers? I've seen some pushback from both sides of the aisle, not just Democrats, from Republicans too, as you suggest.
At this point, there is a real question also of what the ultimate goal is and the consistency, the whole concept of due process in law. How do you apply that in a way where there is a predictable framework for the ultimate goal and the process by which it will be administered?
We'll stay on top of the headlines down in Washington for you throughout this morning, including the latest on this effort. The French President Emmanuel Macron set to meet with President Trump at the White House later today. The UK Prime Minister Keir Starmer also heading to DC later this week. European powers trying to secure a role in Ukraine peace talks between the US and Russia.
So united front, I think we're going to see from Emmanuel Macron and Keir Starmer. Our reporting is that actually these two men were coordinating their objectives with a phone call yesterday. So before they went to Washington, D.C., they spoke about what do they really want to hammer home in the Oval Office to President Donald Trump. It's going to kick off actually very soon, in the next 90 minutes. Macron will join Trump as they talk to G7 leaders. Of course, this comes marking 3 years of the war in Ukraine.
I'm curious what the relationship will be between Donald Trump and Emmanuel Macron in particular, because we've heard a little bit of the back and forth between Keir Starmer, but this hasn't been a government that has really embraced some of the stalwart leaders in Europe, especially if they're on their way out. So there is a real question here about what this will look like.
So this is the UK and France, so we still need to put together a government in Germany. We're told they're going to try and do that really quickly by Easter.
Yeah.
Yes, so on everyone else's clock, maybe not that quickly.
2 months is when they want to put a German government together. When I heard that last night, and I was talking to Oliver Crook last night, we were texting each other, I said, 2 months? They have tariffs to deal with. They have potentially, Trump wants a peace agreement on Ukraine, ASAP. 2 months. They're going to be very far behind on where Trump is on his timeline.
The continent could look very different in 2 months. If you haven't seen the results, these are the results. Germany's conservative leader, Friedrich Merz, and his Christian Democratic Union Party emerging as the winner of Sunday's snap election. But Merz seeing a narrow path to power, partnering with Chancellor Olaf Scholz's Social Democrats, potentially. Joining us now is Bloomberg's Ollie Crook out of Berlin. Ollie, let's start with the results. Any surprises there whatsoever?
Listen, John, I think that overall this sort of came in sort of accordance with what we were expecting. These polls really had been basically unchanged since November when they pulled the plug on the government. And we saw that sort of reflected in the sort of numbers that we got last night. There was a little bit of sort of move around the margins. For example, I was at the CDU headquarters last night where Friedrich Merz gave his victory speech. When the numbers dropped, they came in at about 28%, 2 points below what was anticipated. There was not really a high amount of excitement in the room. And I spoke to a number of lawmakers. They obviously are going with this as a sort of strong victory and that they have a strong mandate. But the reality of the situation is, yes, they are able to build a government with only 2 parties. This was one of the big concerns for the markets in the sense that basically you could end up with a 3-party coalition that's as clumsy and not as ideologically aligned as the last one, which required them to basically dissolve the government ahead of time. Now they can do it with 2. But the reality of the situation is, for those people who are waiting for a sort of fiscal shock and awe, they're going to be waiting potentially a very long time. This is not as straightforward in terms of the CDU being able to get its pro-business agenda through. The SPD, despite having done the worst basically that it's ever done in its history, now is still holding quite a few cards because they are really the only viable coalition partner for the CDU. And as you were just pointing out, we are talking about a moment here where in the United States, Donald Trump has been president for only about a month. Think about what another 2 months means, if that is the amount of time it's going to take to get a government in Europe's biggest economy.
Especially when you have Friedrich Merz coming out and saying that this American government, at least, quote, are largely indifferent to the fate of Europe. And he said the world will not wait for us. So then why are they waiting 2 months? 2 months in a Trump news cycle, Oliver, I don't need to tell you, is basically a lifetime.
Listen, I think that you could take this as emblematic to some of the larger problems with the German economy, right? Which is basically sitting a little bit further back and not being proactive. You see it with the auto industry. Why wasn't the German auto industry one of the most proactive to electrify and be ahead of the curve? They were being a bit complacent. This is a bit the story politically here for Europe. If it's going to take 2 months to put together a government, it could even take longer, right? This is a sort of optimistic timeline for them. And the reality of the situation is, though, for Friedrich Merz, despite the fact that he did tack a bit more to the right, certainly on the issues of immigration, in order to try to sort of pull support from the AfD. As far as Europe is concerned, as far as solidarity within Europe, Friedrich Merz is very pro-Europe. He's a former MEP. He's sat in the European Parliament, and he's been sort of emphasizing that overnight, basically saying that Europe needs to try to get a seat at the table, but basically they can't ever get that seat by begging. Those were his messages yesterday, and that basically you need to have a much more unified Europe and a much more strong Europe. The question is, how do you achieve that if you're not willing to move on some of the stimulus domestically? And again, the big question, will he eventually be forced to go to Brussels, talk about joint debt, potentially to get that defense spending up? That still seems like a distant prospect, but that could be a way to make a major step forward, and for Germany, frankly, to have a very large hand in shaping the future of the European Union.
Ollie, appreciate the update over in Berlin, Germany, following the election results yesterday evening. Joining us now to extend the conversation, Holger Schmieding of Berenberg. Holger, as you know, a lot of investors stateside just have one question. Will this mean Germany can spend more? So I'll ask you that one question, Holger. Will the results over the weekend complicate that effort?
The results actually complicate this effort because we now have the parties at the extreme, at the right-wing fringe of the spectrum and the left-wing fringe of the spectrum. We have the AfD and the Left Party together with more than 1/3 of the seats in the federal parliament. And that means these two parties can veto any change to the constitution, can veto any change to the German debt brake. And so this is a result that was possible, but that did, according to opinion polls, not look like the most likely outcome. It doesn't really matter that much whether Friedrich Merz and his party got 30% or 28 point something percent. What matters is, do they have scope for a serious change in fiscal policy? And that is now even a bit more difficult than it seemed before, because to get either the AfD, a party to which nobody else wants to talk, or the Left Party to agree to a reform of the debt brake would be very difficult. For example, the Left Party would love to issue more debt, yes, but exactly for the wrong purposes, for more welfare. They would like to keep borders open, exactly the opposite of what Merz wants, and they would like to cut defense spending, exactly the opposite of what Germany needs. So finding an agreement so that parties, all in all, with more than 2/3 of seats in the Bundestag, do actually vote for a reform debt brake is going to be very, very difficult.
So, Holger, without the reform of the debt brake, what kind of fiscal space does Germany actually have?
Well, there are ways around it, of course. For instance, Germany could declare a national emergency by a simple majority in parliament. Problem is that national emergencies are by their very nature temporary. You cannot put the long-term secure funding of the military on a safe basis by having an emergency. There is a small chance that if the Germans are really, really fast, that the outgoing parliament, where there would be a majority for the parties that might possibly want to reform the debt brake, that this old parliament still does it, but there are serious legal technical hurdles ahead of that. And as already mentioned, one way around this would be to have the European level finance more, but that with an unchanged German constitution would also not be easy, or more precisely, would have to be very specific, would have to be limited, because otherwise, for simply a lot of Eurobonds for a long time, the German Constitutional Court, judging by how it has ruled in the past, would also say no. So the German fiscal situation is complicated. There are ways to raise federal spending, but it's not easy.
What are some of the concessions that the ruling party would have to make in order to get some of the fringe parties on board to pass either an amendment, that 2/3 required to pass an amendment, to remove the debt brake, or to, as Friedrich Merz promised, achieve independence from the U.S.?
Well, to change the debt brake, you do need this 2/3 majority. And sort of, as I tried to say, to get the Left Party on board is very, very difficult. They would like to ditch the debt brake, unlike Mr. Merz, who might possibly want to just reform it. But the Left Party wants to do exactly the wrong things with the money, and to get them to agree to doing the right things with the money. That is to have a pro-disarmament party agree to a major lasting rise in military spending, and that for a purpose, confronting Russia and Ukraine, that this Left Party does not share, would be very difficult. And if Merz had to compromise on his pro-growth reforms, for instance, by having more welfare and higher taxes on the rich rather than the opposite, that would compromise his urgently needed pro-growth agenda. So once again, it is possible, probably. There are ways around this debt brake issue, but it's going to be complex and not easy and probably not fast.
When you put it all together, Holger, are you more optimistic or less optimistic than you were on Friday about the prospect for the German economy in the next year and 2 years ahead?
Relative to what the opinion polls had projected on Friday, I'm slightly less optimistic. I remain optimistic that Mr. Merz will be able to implement pro-growth reforms, but it will be more difficult rather than easier for him to actually get the fiscal space for the things that need to be done, such as business tax cuts and secure long-term funding for the military. These are serious questions ahead.
Holger, appreciate your input, sir, as always. Holger Schmieding there of Berenberg. President Donald Trump has been pretty consistent on the issue for much of the last decade. He's been justified in making the push, pushing the Europeans to do more for themselves. The effort over the weekend, the outcome of that election, it's going to complicate that push.
Because it's going to be that much more difficult to remove the debt brake. I love what Mario Draghi said a couple of days ago. You can say no to public debt, you can say no to the single market, you can say no to create a capital market union, you can say no to everything, but at a certain point, what are you going to do? And he's saying, I have no idea, but do something. And that, I think, is what a lot of people are wondering, how that's going to happen.
Listening to Holger, it sounds like it's going to be a lot harder for them to then increase military defense spending, and that is going to infuriate Donald Trump, because he has made it crystal clear in Trump 1.0 and now coming to Trump 2.0, he wants an even higher NATO defense spending per each of these countries, maybe as much as 5% of GDP. How does Germany do that if they don't have the fiscal space?
That push will continue, that's for sure. If you are just joining us, welcome to the program. Equities bouncing back from Friday's losses, higher by 0.5% on the S&P 500. With an update on stories elsewhere with your Bloomberg Brief, here's Danny Berger. Hey, Danny.
Hey, John. Shares of Berkshire Hathaway are higher by 1.1% in a pre-market trade. Over the weekend, it reported earnings, with operating earnings surging 71% in the fourth quarter. Buffett's cash hoard also grew for a 10th quarter in a row, now standing at a record $334 billion. Ukrainian President Volodymyr Zelensky says that he is willing to step down if it means peace and NATO membership for his country. Zelensky says it's clear that he wouldn't be in power for decades and would happily make that trade if the offer was made. Pope Francis remains in critical condition as he continues to battle severe pneumonia. The Vatican says that the 88-year-old pontiff is still receiving high-flow oxygen to help with his breathing. Some blood tests show an initial mild renal failure, which is currently under control. The Vatican says the Pope continues to be alert and well-oriented. And that's your brief, John.
Hey, Danny, thank you. Appreciate it. More from Danny in about 30 minutes' time. Up next on the program, bracing for higher prices.
If tariffs raise inflation by 0.5 point and we end up with 2.9% inflation, and maybe that Americans aren't really noticing it quite as much as they did a couple of years ago, but the Fed will certainly be noticing it.
We noticed it on Friday in the UMich survey. How reliable is that economic data? We'll get to that with Nita Richardson of ADP in just a moment. From New York, this is Bloomberg.
In case you missed it, from Bloomberg's coverage at Davos.
Do you think there's one particular thing that you'd like Trump to change in terms of what some people see as the over-regulation of banking in America?
I don't believe, honestly, that we should have a huge amount of deregulation for larger banks. I think that's, you look back at COVID and any crisis, big banks now are strong, are able to step in and being part of resolving issues rather than being the one that creates issues. So I wouldn't really welcome a huge wave of deregulations. What I can see is that, of course, what happened in the US doesn't mean automatically that you will see in Europe or in Switzerland or in Asia deregulation. So The fact is that U.S. banks may become even more competitive internationally through a more benign environment.
Nobody covers Davos like Bloomberg.
Listen carefully. Can you hear the rhythm in the markets? Not just in the syncopations triggered by inflation, but in the preludes leading to global elections, in the dissonance that moves the Nikkei, and the rising course conducted by AI. There's music in the markets, and if you want to learn to listen for it, we'll show you how.
From the world of politics to the world of business, Joe Matthew and Kaylee Lines deliver news, insight, and analysis live 2 times a day, every trading day. Balance of Power at 1 and 5 Eastern, only on Bloomberg. Get your fixed income fix. Watch Bloomberg Real Yield around the world right here on Bloomberg. Context changes everything.
Good news if you're working for Andrea Ocel over at UniCredit and you're a top manager. He's lifting the bonuses for top managers by 11% after a record year. All right? So just sprinkle of good news out there.
I feel like 5 people with little, celebratory hats and yay.
Might be hungover after a long weekend. I don't know. Equity futures right now positive by 0.5% on the S&P 500. In the bond market, yields just about unchanged. 443.90, this run of gains we've seen. 6 straight weeks of lower yields on a 10-year yield. The economic data was not good on Friday, and that contributed to the move going into the weekend. Under surveillance this morning, bracing for higher prices.
If tariffs raise inflation by 0.5 point and we end up with 2.9% inflation, and maybe that Americans aren't really noticing it quite as much as they did a couple of years ago, but the Fed will certainly be noticing it. The Fed's not cutting rates in a world with inflation like that, and in fact, it might even be raising them.
So here's the latest. UMich sentiment showing consumer inflation expectations jumping to their highest level in almost 3 decades. Survey responses, mostly along party lines, showing new inflationary concerns about President Trump's tariff policy. Joining us now to break it down, Neela Richardson of ADP. Neela, good morning.
Good morning.
Got to start with you, Mitch, on Friday. How reliable is that economic data? How much weight should we put on that?
I think it gives you good situational awareness. Should you create monetary policy around it? No, I don't think so. But in terms of where the consumer is going, what they're thinking, and tracking that every single month, I think it gives you a benchmark or at least some context for how consumers are feeling. We can't interview every person on the street. If we could, we get, more real-time data, but it's a survey. There's luckily other things from the Fed about consumer expectations from the New York Fed and other Fed banks that we can also use to support this data. But I think if we take from it that consumers are still feeling inflation and it's dampening their sentiment, I think that's a great piece of information to move forward to and think about the economy in a broader context. We've been pretty bearish. I've gotten a couple of emails, people saying, really, this is coming back. And on the flip side, there's a lot of optimism among businesses. See, I'm actually being positive here. And even though you have consumers that feel negative, the optimism among small businesses has skyrocketed. So which is more important to hiring and to the overall economy? If people have jobs, what they do and what they say are going to be different things.
What they do and what they say are different things, and I think it's a matter of timing because feelings do translate into action. And if consumers are feeling bearish about this economy, it matters for hiring because it's a consumer-driven economy. Consumers are driving the industries that are surviving and thriving right now: leisure and hospitality, healthcare, which includes a lot of discretionary procedures as well, like dental work, for example. So, we can't discount the consumer mood and the consumer vibe. At the same time, it's encouraging to see small firms feeling optimistic because small firms are the engine of growth for the economy. So what are they optimistic about? I think they're optimistic about perhaps lower interest rates, lower financing costs, maybe an easier hiring environment vis-a-vis larger firms who have outmanned them in recruitment and talent. And maybe there's a feeling of less regulation going into this new year, new administration, that gives them some tailwind to their spirits, so to speak.
Is there a sense that the negativity in consumer sentiment could persist for a very long time and it not be felt in the broader economy? And I say this because there was a data out of Moody's that said that the top 10% of U.S. earners now account for about half of all consumer spending, that actually in the period, in the year ended September 2024, they increased spending while the rest of the earners decreased spending. Can this continue for a while because people at the top are feeling pretty good?
As long as asset prices hold up. So if you are a wealthier consumer, some of your optimism and your spending patterns are based on the fact that assets have been really strong over this time period. So while lower income consumers are feeling inflation in a very visceral way. I mean, I was in Louisiana where the price of eggs were over $10 because of the bird flu. You're going to feel that as a low-income consumer. But if asset prices stay strong, you may not feel the same pinch as a high-income consumer and can keep, you know, that fluidity in that spending. But yes, the fact that this is a lopsided consumption market is a very real thing. If asset prices turn sideways, that changes the dynamic for the economy.
That's a tough anecdote and something this administration or any administration, Biden, Trump, very challenging to do because what's going on with the bird flu. Something else that struck me with the University of Michigan survey was that more than half of consumers expect the unemployment rate to rise over the next year. Do consumers think they might be out of a job?
We're seeing that in the turnover rates. There is some anxiety, perhaps, on the worker side. I mean, everyone's seeing the headlines on the federal government and what's going on there, but we don't really talk about what that could mean for the private sector. And from what I'm hearing anecdotally and what I'm seeing in the ADP data, and we've saw that before the new year and the new administration, is that people and workers are staying put. There's a sense that the economic prospects, the job opportunities aren't as plentiful as they were 2 years ago. It's taking longer to get a job. It's taking longer to find a white-collar job. We've seen business services retract their hiring. New college graduates are taking longer to get a job. And there's a sense that maybe I should stay with the employer I have. Also, with the Great Resignation, a lot of people switched like 2 years ago, and they're not ready to move. So that turnover is having an effect on the labor market, and it's leading to the stasis that we're seeing. It's like the quiet before the storm in some sense.
Andrew Honhorst, the city, talked about the same thing, this low churn dynamic of the labor market, they think is inconsistent with a healthy labor market.
If the market is strong, you should be able to quit your job. And that's why people are watching quits come down to some of the lowest levels since the pandemic. And that's the reason why some people are saying it could portend something less positive.
Focused on jobless claims as well at the moment, aren't we? Every single Thursday at the index level, things are still okay. Beneath the index, just focused on Virginia, Washington, D.C., certain places, are things starting to break.
And people put out reports over the weekend of the proportion of federal workers that work in the D.C. area. It's about 20%. So people are going to be looking at specific counts in specific counties to try to understand how this is trickling into numbers to get a broader sense of how to even frame this in conversation.
The estimate for Thursday morning, by the way, is 221. The previous week was 219. Nita, good to see you. As always, thank you. Nita Richardson there of ADP. Up next on the program, Matt Stuckey of Northwestern Mutual, Henrietta Trays of Vader Partners. We'll catch up with the former senior advisor to President Biden, Amos Hochstein, and Earl Davis of BMO.
Morning, this is Bloomberg Daybreak Europe. I'm Tom McKenzie in London. These are the stories that set your agenda.
Taking you from the U.S. market's close to the overnight session in Asia, we'll walk you through what you need to know to kickstart Europe's trading day. Live from our European headquarters, we bring you the day's top market-moving stories, unmatched expert analysis, and on-the-ground reporting from across the continent. Tune in to Daybreak Europe, only on Bloomberg Television. Context changes everything.
In 2000, post-Napster, generally everybody wrote off the recorded music industry, including the investment community. And I didn't mind that chapter because then I got left alone. And actually, I think out of that period, we started to create better art because the pressure wasn't on from the technology to be the most powerful chapter. And then iTunes came in, and iTunes, to Apple's credit, did have a boutique taste mentality about the store, which meant that I think they understood. I can tell you from that period that the artists that came through were of a very high quality because it was encouraged to be boutique. Now, ironically, this chapter has made us more money times 5 than the iTunes chapter and the post-Napster chapter. But an algorithm tells you what you want, not what you might like. And there's a difference between what you want, but with streaming, the downside is you have incredible penetration, and we have hundreds of millions of people around the world. And so that has been very lucrative as a business.
From the beating heart of global finance, economics, and politics, and wherever newsmakers are moving markets, Bloomberg brings you conversations that allow for deep discussions and important insights. What do you think the future is for inflation? Is this new normal? Are markets too optimistic? How do you worry about the things that are outside your control? How does the current fighting completely stop? I'm Francine Lacroix, and this is The Pulse, every weekday only on Bloomberg.
There is this real momentum from Wall Street. We are basically deep in the European earnings season.
Take a look at how we're faring when it comes to Asia markets.
Jumpstart your trading day on Bloomberg Open Interest.
2 hours of single stock stories that are driving the opening bell action. We'll take you to Wall Street, Main Street, the C-suite, and beyond.
These are companies that are growing their market.
The great companies in the U.S. are the companies hitting the cutting edge. That's a different story.
Get the inside track on what's buzzing in markets.
With the players who are shaping the narrative.
If you have bad earnings reports, you're going to get punished.
They're not buying what the industry is selling. Join us on Bloomberg Open Interest. Every trading day, only on Bloomberg.
The starting level of yield is still quite attractive, and risk assets are still quite rich.
We still believe that the Fed is much more sensitive to labor market weakness.
If the labor markets really deteriorate, we would expect the Fed to react in a strong way.
The single most important economic data point right now is unemployment claims.
35,000 feet, the labor market still looks really good.
This is Bloomberg Surveillance with Jonathan Farrow, Lisa Abramowitz, and Anne-Marie Hordern.
Live from New York City, the second hour of Bloomberg Surveillance starts right now, and your week ahead looks like this. It concludes with the Fed's preferred read of inflation, core PCE. That comes on Friday. Lots of earnings in between, 2 big ones. The big one is NVIDIA on Wednesday. But look out for Home Depot on Tuesday. Some reads around the U.S. consumer. Not satisfied. Disappointing on Friday. Let's see if that continues. And that was reinforced by the weaker outlook from Walmart as well last week. That dragged U.S. stocks lower, the biggest one-day loss on the S&P 500 so far this year. Equity futures bouncing back by just 0.5% on the S&P 500 this morning. Big losses on the Russell. Going into the weekend, we bounced back this morning, Pramo, by just 0.8%.
I like how you framed both Home Depot and NVIDIA. They're 2 pillars of the American exceptionalism story exemplified. On one side, you've got consumer spending, albeit challenged in the housing sphere with Home Depot and some of those renovations. But then in NVIDIA, this idea of how much can chips and the AI hope and dreams that we've seen really power that U.S. exceptionalism. To me, that might be the key moment